I think that Bitcoin is going to change a lot of stuff about how our society is shaped, and that's why I think I'm trying to keep my pulse on everything that's happening in Bitcoin. I think it's going to cause a lot of rapid change once it goes global and people really start using it, and a lot of people are going to get hurt if they're not prepared.
Who do you think are the main people that stand to lose?
People that don't pay attention and people that don't pay attention to it.
What's up, Internet?
Sorry about that, guys. Hey, everybody, and welcome to the Multiversity Project. Today, Chris and I are going to be doing an interview with special guest Juan Galt about Bitcoin and crypto. We've set out to do a comprehensive episode, not only about Bitcoin basics, like what is Bitcoin, but also we're going to go into the deeper aspects of the technology, the potential for it to shape the future, the history of Bitcoin and the cypherpunk movement behind it, the associations with libertarianism and anarchism, and the social and political implications if Bitcoin takes off, like we really believe it will. So if you enjoy this content, please give us a like, subscribe, blah, 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 blah. All that really helps us out. Let's jump into the conversation. Hi, Juan.
Hey, thanks for having me.
Thanks for coming on.
Yeah, this should be fun.
Yeah.
Yeah, so let's get started. So first, I thought it would be cool if we could talk a little bit about what is Bitcoin. Actually, first, let's back up. Let's talk about how we all got into Bitcoin, how we all heard about it. Because that's always a fun way to start off Bitcoin
Sure.
meetups.
Sure.
So Juan, since you're our honored guest, why don't you go first?
Sure. So I heard about it during a philosophy podcast in like 2011, 2012. I think it was about $7 the price, and that was already like coming from the libertarian perspective, from a very sort of philosophy oriented, like Aristotelian kind of philosophy and libertarian philosophy. And and then it just made sense in a lot of ways. I was already educated about Austrian economics and the basic sort of teenage libertarian as you might run into today. And I heard about it and I was like, okay, this is fascinating. So I started paying attention to it, bought a little bit. I was pretty broke, so not rich or anything, but
so what year was it when you bought your first Bitcoin?
I think it was like it was $7, so it must have been like
it's like
2011. Yeah.
Depending on if you hit it on that gigantic from 1 to 32 to 2.
Yeah, so I caught it on the way up. Okay. And then I think I might have sold a little bit at like 15, and then I just held some all the way through the bear market. Fun fact, I didn't know how to back up my wallet at the time. Nobody was talking about the backup process at all. It was a clusterfuck. You had to download Bitcoin Core and then run it, and then there was just a file somewhere on your computer that I didn't know about. So I was not a technology person at all. It wasn't until like a year later that my friend explained the internet to me, like how it actually worked, like I could use it. I was born with computers and raised with computers to some degree. I think I had a computer since I was like 7, but I didn't know how to use it, right? So that those Bitcoin are gone. I ended up not backing it up and stuff. It was just like a handful of them, it wasn't a lot.
That's right.
And then
like a handful of
a handful of Bitcoin is like $100,000 now, right? So that happened, and I think it's a similar story that I think a lot of people have gone through something like this. So that was like a really formative sort of experience. And then around $100, I started to hear about it again and started to get back in. And around $1,000 or so, I was like, okay, well, I'm going in professionally, and I dropped everything that I was doing. I was studying social work and psychology and stuff, and I pretty much dropped everything that I was doing and just started studying Bitcoin. Yeah.
Cool. And how long ago was that you dropped everything and started studying Bitcoin?
So 2014, I dropped everything and I started going to Bitcoin meetups in Toronto at Bitcoin Decentral, which is basically the birthplace of Ethereum. I was really lucky to be there at the right time. I actually got to meet Vitalik and I got to kind of see the birth of Ethereum, at least from the perspective of Toronto. They had like 3 bases. They had one in Silicon Valley, one in Switzerland, and one in Toronto, as far as I understood. So I got to see the Toronto version of it. And Anthony DiOrio, who's one of the guys, he basically cash flowed Ethereum for the first 6 months or so until launch. He was the owner of Bitcoin Decentral, and I got to bump shoulders with him and a bunch of other people that were like, early crypto people, and I got to learn a lot from them. and then out of that I started doing journalism. So I once I understood the fundamentals, I started teaching and I started writing, and then people started paying me to write, and so I just became a journalist.
Cool.
Mm-hmm.
Thank you for
Sure.
sharing your story.
Yeah, thank you. That's quite a background. I am not a crypto professional. I don't work in this industry or anything like that. I first heard about it. It was winter 2009, 2010. So really early, through my dad, who was an IT professional, and I think he had an intern who told him about it or something like that. And at that point, I was 17, just turning 17, and not super into tech. I was curious about it. It was framed to me as like digital gold, and I think it was still around a penny or maybe less than a penny at that point. And I went online and I tried to figure out how I could mine some, but just reading through the forums and everything, it was way over my teenage brain's head. So I put like 6 hours into it and I completely forgot about it. I didn't hear about it again until 2013 or so is when it piqued my interest, when it was running up to $1,000 or so. And at that point I was interested more from a libertarian voluntarist kind of perspective. I started going to Bitcoin meetups in Austin, and yeah, I bought my first Bitcoin when it was like $1,000.
Oh, right at the peak of the Mount Coxwell.
Right at the peak.
Oh yeah.
Yeah.
All right, this thing has definitely got some steam. It's going to 10K.
It's
going to $1 million. Yeah.
No, I just thought, I don't know what's happening, but I'll get a little bit now and see. And I was curious. I was curious about its potential to change the world and like take some power away from banks and from governments and things like that. So I knew it was something I wanted to be informed about, if not be involved in. I did some freelancing, like for like a little Bitcoin news site, and got paid in Bitcoin. I've been paid in Bitcoin at various times throughout my life, but never been that involved.
Cool. Yeah, for my story, I heard about Bitcoin around 2010 in college. One of my friends in college said, "Hey man, there's this really cool new digital currency called Bitcoin, and you can just run this program on your computer and it mines them, and you basically get free money." And I was like, "Well, cool. How much can you earn?" And he said, "Oh, I think it's maybe like $1 a day." And I was like, "That sounds stupid." And then I forgot about it for the next 3 years. And then I heard about it again in 2013, and I guess I had read online, or a friend had told me, like, "Hey, did you know that there's this currency that there's this place online where you can buy drugs? It's called the Silk Road, and people are just getting away with it." And I was like, "No way! There's no way that people would do this on the internet. The government would find them." And so I looked into it, and I was like, "Oh, they're using this thing called Bitcoin. That's this anonymous currency." And I was like, "Wait. How does this work?" And I just kind of went down the Bitcoin rabbit hole at that point, and I got really into the Bitcoin subreddit, and I was like posting on there and asking questions and explaining things to noobs, and I decided that, oh, this thing is going to probably change the world. So I was so obsessed with it that I was like, okay, I'm like boring all the people that I know. I'm talking their ear off about it. So I want to just go talk to people who are into this like I am. And so I was like, how can I do that? I'll go to some Bitcoin meetups. So I went to some Bitcoin meetups like you did, and I got to have as many conversations about Bitcoin as I wanted. It was great. And there was a co-working space called the Denver Bitcoin Center, which was funded by some of the entrepreneurs in Denver. And I was their first member. That's my claim to fame. But I also just went to all the meetups and talked loudly about my opinions and explained Bitcoin to the noobs. So that's how I got involved in Bitcoin. And then, I just started buying it around 2013. And I was like, all right, I gotta save this because it's going to the moon. I experienced that first bubble April 2013, and I was like, it's okay. It's only went up to 200, now it's 100. And then I at the end of 2013, it went up to 1,000, and I was like, it's gonna keep going just like you. And at the end of that bubble, my life got kind of wrecked actually. Like it was like a lot of things came to a head at the same time, and then I got this like back injury, and then I spent a while just kind of like recovering, but I don't know. I feel like I just kind of joined the revolution, and I never really gave up. And then finally in 2017, when the price came up again, I was like, all right, cool. I've been vindicated. So I've been trying to get into Bitcoin development basically since I started, because I have a background in software development, but it's only just been like just in the last few months that I've like set up a Lightning node and I've started getting involved with that. So
That's great.
So that's all of our stories. So I think maybe it would be a good idea to just get into what is Bitcoin, what makes it different, what makes it exciting, what makes it controversial. So Juan, can you just give us a little short elevator pitch on what's Bitcoin?
Sure. Great. So Bitcoin is a distributed currency. It uses cryptography to prove identity. So instead of you giving Bitcoin your social security number, legal name, home address, country of birth, and a sample of your blood, or maybe these days eventually they'll ask for a stool sample just in case. Kidding, that's gross. Bitcoin just cares
invasive
about
KYC.
Very invasive KYC, which
Yeah.
is kind of where we're at. Bitcoin just asks for for a password, basically, right? And then it uses cryptography and sort of ancient math, in a sense, to authenticate that. And then you can send money across the world in about 3 seconds. It'll reach from America to China. In about 10 minutes, it'll be basically virtually irreversible. So it's money that's sent, and once it gets there, it's there. And in that sense, it's like cash, unlike bank accounts and the credit system, the debit system, where transactions they're escrowed by the banking system, and then the banking system can reverse them based on policy and disputes and so on. So that's kind of like the base layer of Bitcoin, and a lot of stuff is being built on that. And when people say that Bitcoin is decentralized or distributed, it basically means that there's many copies of it that are all synced up, and it makes it very difficult to take down, and it's designed to be very difficult to take down even by the most powerful institutions that we're aware of. And there's plenty of history of this now. Bitcoin's been around for about 10 years now, and its uptime is like 99.9999%. I think there was a moment for like 10 minutes that there was a bug and they had to do like a back roll and fix it, and then it was like fixed, and then
Yeah,
so
I think you might be talking about like maybe the first year after it was launched, there was this bug where somebody created like 1 billion Bitcoin.
Yeah, there was a
something like
2010.
that. So they had to hard fork it.
Yeah, there's a 2010 bug where they had to there was like a manual moment where engineers had to be like, oh, okay, this is clearly a bug. So they changed the code, updated the software, and had to roll back like 20, 30 minutes or something like that.
Yeah.
So other than that, it's basically ideal uptimes. You'll have a hard time finding a service that has this kind of uptime. Yeah, I think that's the key. I think there's various estimates that there's something like 100,000 different copies of Bitcoin all over the world, distributed all over the world. And they're all talking to each other more or less, and they're basically catching up. And so the system is very difficult to take down, and that's on purpose. The goal is to just become, immutable and unmovable. And that's already what it is.
Cool.
Bitcoin in a nutshell. Yeah.
So what about the connection between Bitcoin, cryptocurrency, and the crypto anarchy movement, and the libertarian movement? We all kind of alluded to that in our intros of how we got into it.
Sure.
Yeah.
Yeah, and your intro also talks a little bit about there's kind of that Bitcoin is a political tool, or a tool for political revolution. I would quibble with that. I think so. There's definitely a history to Bitcoin, right? It comes from the cypherpunk movement, which you're certainly more kind of educated on than I am. I kind of come from the libertarian angle, and then I've sort of learned that I'm actually a cypherpunk, and that I share a lot of the values of the cypherpunks.
So it's actually called cypherpunks.
Cypherpunks.
Yeah, there's another word, cyberpunk, which is related, but specifically there was a cypherpunk mailing list, and that's what they're called.
Okay.
So it's a portmanteau between cyberpunk and cypher.
Okay. What's the difference between cyber and cipher?
So I don't know what a cyberpunk is. I just know that in one of the, it was either one of the manifestos, I think it's in the Cypherpunk manifesto actually, where they say like this is a portmanteau between cipher and cyberpunk. So I think cyberpunk is something a little bit less specific. It's kind of just like, okay, you want to be on the internet.
Internet
and be
punks.
a punk. Yeah. Yeah. Whereas cypherpunks are more serious. They're like, we want to
cryptography,
use,
right?
we want to use
Cipher
cryptography.
specifically refers to crypto.
Exactly.
Yeah, cipher is cryptography, yeah. Yeah, so there's definitely a history with the cypherpunks, and so Nick Szabo, who's one of the kind of OGs, and people, some people credit him with being Satoshi. I think that's certainly debatable, but he definitely knows a great deal about Bitcoin, and it comes from, he's the guy that invented smart contracts. He has a speech that he made in DevCon 1, I believe, which is an Ethereum conference, he talks about how Bitcoin was inspired by objectivism, which is sort of a very kind of hardcore libertarian philosophy that comes from Ayn Rand, and there's sort of narrative around it, and there's a marriage between the cypherpunks and the libertarians maybe a few decades ago, and out of that the idea of sort of hard money that follows Austrian economics merged with cryptography comes the idea of Bitcoin, and then they try a few things, right? They try like e-gold and a few centralized solutions that somebody created, the silver dollar, like a sort of like the Liberty Reserve, right? And it was a silver dollar that was minted outside of American sort of financial policy, and so the American government shut them down, and that's they
were like a digital currency, right? Liberty Reserve.
Were they?
I thought they were like a centralized.
Familiar.
Yeah, I'm not exactly sure.
I'm pretty sure they were a centralized ledger.
They were okay.
I'm pretty sure they were a digital currency.
Okay.
Yeah, I don't think they were precious metals.
Okay.
But I could be wrong about that.
Okay, so that might be a different example. I know that there was another one that there's a guy that was trying to create silver coins, like minting his own silver coins. It's a libertarian, and he also got shut down, right? And so the failure of centralized services led to this sort of marriage with cryptography that decentralized, that created a distributed currency, and that's why Bitcoin is. Which is why it's funny that like modern libertarian sort of crypto people, they're like, oh, let's crypto backed by gold. It's like, no, we already tried that. Centralized, it's not gonna work.
Yeah, so Liberty Reserve was a Costa Rica-based centralized digital currency service.
Okay.
And it got shut down by the U.S. government. There was a similar service called eGold, which I think was basically the same.
That was Nick Savos, and
yeah. So why do libertarians like Austrian economics?
Right.
Well, let's have a few different options for a question here. Why do libertarians like Austrian economics? Why do people who like Austrian economics like Bitcoin? Mm-hmm. And why do they like gold?
Right.
So which one of those should we do first?
I mean,
well, first I think we should go into like what Austrian economics is.
Right.
Okay. Would you like to?
Sure, I can give like a brief overview of Austrian economics. Maybe Austrian economics is a different way of looking at and studying econ as opposed to what most people are taught, which is usually Keynesian school economics or maybe Chicago school economics, depending on what university you went to and studied econ at. But basically, Austrian economists, rather than building a lot of models and doing studies in the world, tend to build economic theory based on first principles. And their first principles come out a little bit different. One major example of a difference between the way that Austrian economists think and the way that Keynesian economists think is in terms of inflation. Most people think of inflation as how much prices are going up, and they measure inflation based on how much prices are going up. From an Austrian perspective, you're not looking at how much prices are going up. That's one of the effects of inflation, but inflation to an Austrian economist is literally how much is the currency inflating or deflating, how much currency is in circulation. So a lot of emphasis in Austrian economics is placed on the fact that when governments print more currency, maybe prices will stay stable because the economy is growing, but actually what's happening is as the economy is producing more and more value, more and more currency is eating that up. So
yeah, I would add that that libertarian sort of theory and Austrian economists, which are generally libertarian, they come from a perspective that money is sort of an aspect of capitalism, right? I think that's you would think that money is a capitalist thing, and so there's a frustration, and this is obviously the way that I put things and I understand things, not necessarily anybody else's sort of writing, but there's a frustration with fiat currency that is dictated by a semi-governmental sort of monopolistic organization, which is the private Federal Reserve banks. And so there's sort of a critique that if the government get out of the way of money, society will reorganize itself around money that is not politically manipulated, and that's one of the reasons why they're so attracted to gold and silver and critique fiat currency so much, because fiat currency is sort of manipulated in supply and in interest rate by these the Federal Reserve banks, which are a semi-governmental, semi-private institution, right? Like you and I can't go and print money and dictate or strongly recommend interest rates to other banks. If we print money, we'll go to jail. But the Federal Reserve has a legal monopolistic right to do so, and that makes it a kind of semi-governmental organization, even though they claim to be private, right? And so there's a frustration there, and there's a theory there that private money is better, and that's part of where Bitcoin sort of anchors itself, right? It says, well, nobody should have that kind of power, and indeed that kind of power is very asymmetric in society. So there's if you have the power to create fiat, to create money out of thin air, then you can spend it at the current value, and then over time that new issuance will turn into inflation, and the prices will rise because there's more units of money in the market, so each unit is worth less, and it creates much problems.
Okay, so I think maybe to summarize, Austrian economists tend to favor hard money, and Keynesian economists tend to favor soft money or easy money.
Right. Austrian economists tend to favor money that is stable and predictable in supply, because money is supposed to be like a unit of value. There's a certain amount of money in the economy, and that money represents a certain amount of value that you can exchange. What Keynesian economists like to do is they like to inflate and deflate the amount of money in circulation in order to manipulate the economy to grow or shrink when they think that things are getting out of hand. But Austrian economists would say that actually the fact that they're messing with everybody's sense of value, with everybody's ability to save, with everybody's ability to price things, is the reason why the economy is so unstable. Mm-hmm. Austrian economists in the past really liked gold because gold is like a physical good. You mine it, nobody could just create more gold. Maybe new gold could be discovered, but in general, like the amount of gold in circulation was pretty stable and like rising only due to work, like people actually mining it. But Bitcoin is something even better because the amount of Bitcoin in circulation is determined by an algorithm. Nobody can control it, and everybody knows how much there is.
Right. Yeah, that's a really interesting feature of Bitcoin, is that the supply is algorithmically limited. The supply is completely inelastic. So there actually hasn't been any asset like this in history, except for maybe land, where the demand does not actually drive the creation of more supply. So I've just been reading the Bitcoin Standard by Safety, and I haven't gotten to the end yet, but he talks a lot about how you can actually look at historical examples of when societies went from hard money to easy money, and you can easily kind of see that the society, the character, the nature of the society kind of subtly changes, and then it suddenly changes. It's like slow at first, and then it's fast. And he actually brings up the argument that perhaps this is the reason why the Roman Empire fell, because they had these gold coins, and then they started debasing the coins a little bit, and they started putting a little more silver, and they would try to hide that they were doing this. But of course the public catches on, and they can see that the money is being debased, and this causes all kinds of different effects. Like, so Safety likes to talk about time preference. I'm sure you've heard this term, time preference. And time preference is, so when you have a hard money, when you have a money that you know its value is not going to be inflated away by some central authority, then that encourages you to save money into that asset. And so it encourages you to plan for the future. And this is called having a low time preference. So you're thinking, many years out in the future instead of what you would do if you had a high time preference, which is you would spend all of your money as soon as you get it, and then maybe you even go into a bunch of debt, because actually your money is worth much more to you now than it is in the future, because its value is being inflated away. And so I think we can look at various historical examples to see what the effects of going from hard money to soft money are. But the biggest, most recent example is, of course, when we went off the gold standard as basically a civilization.
Right.
And I think that you can point to very specific things that happened after basically 1913, when the Federal Reserve was implemented. At that point, we immediately had a big world war over something that was like... Nobody really knows what it was fought about, really. Like there was Gavrilo Princip who murdered the Archduke Franz Ferdinand, and then the whole world just like lined up across these lines, And if you look at the money, it kind of makes more sense, because at that point, the U.S. Federal Reserve, the U.S. had its own central bank, which is the Federal Reserve, and then England had a central bank, and a bunch of the countries in Europe had central banks. And so what they were doing is they were inflating their currencies in order to fund these wars, which, basically what inflating the currency does is it steals money from the general population in order to fund whatever the government wants to fund.
Yeah, in a very passive way.
Yeah, so the way that inflation steals money from the general public is almost unnoticeable, especially to poor people who are basically just paying attention to getting by. They're paying attention to getting their next paycheck, feeding their family. They're looking at they're very zoomed in on their life, and they're not looking at, there's a 3% inflation per year, so that means that I have to actually save my money in, I can't just put my money in a bank account that pays 1% per year, because I'm actually losing money over time with that. So a lot of people don't realize that it's happening, and so it's this very convenient way for the government to essentially spend money on whatever projects they want.
Yeah. And you were talking about time preference too. I think it's important to note that governments, the way that most of them are now, or the way that most of our governments are now, democratically elected, with governments changing every 4 to 6 years, maybe depending on the country, are incentivized to have a high time preference. Because when people are looking at how successful is this president, how successful is this Congress, they're looking at G, which is how much money is being spent and flowing through the economy right now. So when you're president, if you want to look like you're doing well, you have every incentive to try to get people to spend money. Mm-hmm. And if you have an inflationary currency where your money is going to lose value over time, that is a huge incentive to spend money. And that's exactly what Keynesian economics is all about. It's about trying to get people to spend or save and manipulate the economy that way.
Mm-hmm. Right, exactly. And this reminds me of a criticism that people often level at corporations, which is that the CEO has every incentive to make it look like on paper, like the profit for that quarter has been maximized, even if it means just, cutting the quality of the product and cranking up the fleecing of the customers, just basically scamming people more and more. And so it encourages people to, when you have a high time preference and you're only looking short into the, quarter by quarter, that incentivizes you to cut corners and to do things that are actually harmful in the long term, but they kind of look helpful in the
and pump the stock market, right? And keep the stock market value of the company. There's Silicon Valley. I don't know if anybody's watched that comedy show. Mm-hmm. There's this whole thing about the nerd that created this super decentralized encryption algorithm, compression algorithm, is talking to this corporate CEO that just came in to sort of manage things with the VCs and stuff, and it's like, well, we gotta sell the product. And they're like, yeah, we gotta sell the product. Yeah, we gotta sell the product. So what do you think the product is? And then the nerd is like, me? It's like, oh, no, you're not the product. The product is the stock. I gotta sell the stock. Yeah. So I think that really kind of puts that in perspective.
Yeah.
Yeah.
You made a good point earlier too, how you said that when you inflate a currency and it's distributed to banks initially, then basically banks get this new printed money at a time when the new printed money still has the same value as the old money that was in circulation, because the economy hasn't had enough time to adjust.
Yeah, it hasn't hit the market yet. Yeah.
Yeah, so it's a...
Yeah, that's called the Coase effect. Let me look that up. There's a name for that.
I'm sure there is.
Yeah. I'm sure there's a name for it, but yeah.
Yeah, that's the scam. That's the trick. That's why it's valuable. I mean, if inflation hit immediately, then there would be no value in it. Something else you mentioned, which struck me as really, really interesting, was you said that libertarian sort of Austrian economics blames or sort of maybe that there's nuance in it, but that it lays cause at fiat currency for the booms and busts cycles of the economy. Mm-hmm. I think Bitcoin, something like Bitcoin and crypto, and general theory about business cycle, as far as I understand it, I'm certainly not a expert economist or anything like that, would say I think fiat exacerbates the cycles and makes them more volatile, but I think the cycles are more of a human thing. It's a psychological thing. Like you can you could probably measure cycles of optimism and pessimism in people just by looking at them and measuring psychological states. And that's just kind of how we do things. We have a theory, we go practice it, we learn a few things, we realize a few failures, we have a state of sort of kind of recession and consolidation of ideas, and then come up with a new theory and go again. And, which is why people argue that the markets are emotional, and this is I think there's some middle ground. I'm much more of an Austrian than I am a Keynesian, but I think that's an important aspect to it.
I agree with you on that, actually, and maybe I was oversimplifying. I don't know that all Austrians would say that all cycles are because of the way that currency is inflated, but they at least from what has been explained to me, they see a lot of the volatility as coming from that, because basically the market has to constantly adjust itself to the fact that it's working with money that it's misassigned value for.
Yeah, I mean, so that's kind of like a little bit of background on libertarian sort of economic theory and so on, which we can probably spend 2 episodes on and bring like a libertarian economist to sort of bring context to as well.
Yeah.
Right.
Oh, so here's what I was going to say. Sorry. So basically, we have an example of what happens when you have an economy with hard money. It looks like Bitcoin, okay? Basically, you have this mania, and then you have this depression. And then you have this mania, and then you have this depression.
I completely disagree with you. Bitcoin is not... Bitcoin at this point is not money, primarily. Bitcoin is primarily an investment. People primarily see it as an investment, and people's opinion on how much it's going to grow or not grow swings wildly with emotions and
so let me finish drawing the...
Bitcoin's not really money.
Let me finish drawing the analogy. So we can draw an analogy between Bitcoin and the gold standard, because the gold standard was also hard money, and we also saw similar things on the gold standard. It was different because gold was already money at that point. You're right. Bitcoin is growing, and people are investing in it, but they're not using it completely as money yet, and that's why it's especially volatile right now. Mm-hmm. But gold had similar features, and what I mean by that is gold there would be these extreme money crunches where suddenly there would be no money anywhere, and a bunch of businesses would go out of business, and that would be a depression. And then that would happen for like a few months, and then it would go back to a boom. And so basically, most of the time the economy was booming, and occasionally there were these kind of panics. But then, everything would kind of chug along. And so what the Federal Reserve tries to do is it tries to smooth out the money and the banking system so that those panics don't happen.
Yeah, by manipulating.
And so what ends up happening, and people don't realize this, is that the bad times actually last a lot longer too. So.
What an Austrian economist would call those panics is corrections, market corrections. Sure. And they would say something like, the Federal Reserve often doesn't allow the market to correct. Like, if people have overinvested in a certain thing, then there should be a crash in that industry.
Right, because when in a mania, you're having all of this investment into stuff that ultimately doesn't pay off. And so when the Federal Reserve sees this coming and floods the market with money, you're just rewarding all of those bad decisions, and that's going to cause even worse problems down the road than if you just let the consequences of those bad decisions play out. Then that allows people to have feedback on their bad decisions. It allows people to learn from their mistakes and do better the next time. Whereas in this economy of kind of easy money slush fund, nobody's really learning from their mistakes in the long term.
Yeah, it's bad for people's psychology to not have corrective feedback and to be sort of numb to the material consequences of their decisions, right? So bad investment doesn't get felt as strongly. I mean, as far as money goes, Aristotle had a kind of thesis that the best money has certain qualities, and that's divisibility, fungibility somewhere in there, which is that one unit is virtually indistinguishable from another, and so they can be valued by the same price and they can be appraised in the same way. Another one is like a hard money would have like a limited supply. I think that's sort of part of it, right? There's a few more. There's like 2 more.
Right. You want it to be scarce. You
want it to be scarce.
Yeah.
That's
You don't want your money to be like glass beads, like that, like they I think they had money like this in Africa or something like that.
There's been seashells and
then the Europeans were able. They had factories that they were able to produce all these monies and basically create the money that the colonies were using, and crash the economies of those of those colonies. So,
Yeah.
yeah.
You want it to be scarce. There's a few more, right? There's a couple more, and Bitcoin compared to gold and compared to fiat ranks fairly well. I think there's only one area where gold is slightly stronger. So whether Bitcoin is money or not is debatable. I think you also think about currency. Currency is something that you actually spend in the real world for goods and services, and Bitcoin is certainly not there, and the penetration as a currency has not been, I think, what a lot of Bitcoiners would have hoped for and expected. One of the realities of Bitcoin, is that we don't really understand what currency is and how it comes to be. We have some economists now coming up, like Cypherpunks, that are talking about the way in which currency happens, but a lot of the economic theory that libertarians talk about are from economists that are long dead and come from an era pre-internet, pre-digital world, and the sort of birth of industrialization. So I think there's sort of like a gap of understanding about modern economics, especially in the internet age.
I just wanted to clarify my stance that when I said that Bitcoin isn't primarily money, like Bitcoin is money in the sense that you can use Bitcoin to buy lots of goods and services, and you can use it as a store of value. It's a very unstable store of value right now, but it is money in that sense. What I meant by that is that Bitcoin primarily in most people's minds and in the way that it's used most of the time is not money. It's not like the dollar where the primary purpose of Bitcoin is as a means of a storage of value and exchange. Bitcoin primarily, as it is right now, is an investment vehicle. That's how people treat it. That's its function in the economy today. Does Bitcoin have the potential to be money? Like Bitcoin as a technology, I think would make amazing money. I think it would be way better money than we've seen. But right now, what it is isn't money.
Yeah, it's
well,
different things.
So
to different people,
I would disagree. I would say that Bitcoin is money to me and people who use it as money.
Yeah.
We have preconceived notions about how money should be based on what money has been in the past. And so one of those things is that, okay, well, this is the monopoly money. This is in two different ways. But in the way that I'm talking about now is, so the government basically says this money is legal tender, and so everybody must accept this money in payment of debts. But what Bitcoin signals is this new era of money where people are not required by force to use any particular currency as money. And so you might actually never see a situation. You might never see a world where everybody is using Bitcoin or everybody is using Dogecoin or everybody is using, whatever it's going to be. And this is because nobody's forced to use any particular currency. People are just using whatever asset they find the most valuable. And so the way that I see money now, like in light of this new technology, is, there's a certain community that builds itself around that asset. And to those people, that asset is money. Whereas to people who are outside the community, they're like, that's not money. And that's okay. As Andrea says, money is a collective hallucination.
Yeah.
It's just like we decide that this has value. So.
Yeah. And our individual hallucinations about it are small enough that we can't have a dramatic impact on that hallucination, so to speak. And so even if I suddenly said, oh, this doesn't really have the value that people think that it has, I can still sell it in the market. That's what liquidity means. Liquidity is how much demand is there for the thing at a given time, so that you can actually sell it, right? So if you go to a lot of the altcoins, right? Something else that I think you mentioned earlier was that, no, you mentioned it, that Bitcoin is more like real estate in that you can't create, like more assets of its kind aren't created based on demand. I mean, obviously you can quibble with that. You can say, well, you can build up and down, right? But then there's only so much space that you can build up and down.
Land?
On land,
yeah.
Right? And then as far as crypto goes, Bitcoin is certainly irreproducible, as you've seen 10,000 different cryptocurrencies try to create Bitcoin and make it better, and have all up to now almost entirely failed. I think the only thing that's had, credible success are maybe like Ethereum and Monero. And then, you got to give it to some of the exchanges, like what Binance has done with the Binance token actually has kind of an interesting structure because it's based on a business. It's more of a stock than it is a currency, right? I don't think it's even trying to be a currency.
Yeah.
But the point is, most of them have failed, but there is sort of demand to try to create more, and it's just not being created.
Right.
Well enough.
Well, and the reason is, it's not that altcoins haven't created something that's technologically as good or maybe even a little bit superior to Bitcoin in some ways. It's that for money to be money and for just digital assets to have value, it's all based on that collective hallucination, like
exactly,
you said. And Bitcoin has the first mover advantage. Bitcoin has the name recognition. Bitcoin is something that's talked about on the nightly news these days.
Well, yeah, and importantly with altcoins, and altcoins are, for the audience if they don't know, they're cryptocurrencies other than Bitcoin, which were inspired by Bitcoin. A lot of altcoins have introduced new features that Bitcoin doesn't have. And this doesn't necessarily cause that new coin to be a better store of value. And so, it may do something cool that Bitcoin doesn't do, but that doesn't make it a better store of value. And what makes Bitcoin a good store of value is that it's secure. And what makes Bitcoin secure is that it's decentralized. And what makes it decentralized is that lots of people are using it. And so there's this kind of network effect with Bitcoin that's extremely difficult.
But there's something else. There's something that I think Giacomo Osuko is the first person I heard mention this. There's a quality that Bitcoin has that other altcoins and cryptocurrencies don't have, or arguably don't have, which is it has an immaculate conception. And it sounds very religious, but what it means is when Satoshi Nakamoto created Bitcoin, nobody knew that this thing was going to become a multi-billion-dollar industry. It was like, let's try to build a decentralized money system. And how would you do that? And so they put it together, and for like a good year and a half or two.
Knew.
Well, maybe he did. I'm sure he had some doubts at various times.
He was one of the most successful people to be anonymous on the internet ever.
Yeah, he was great at it. No, I mean he was definitely cypherpunk.
He clearly knew that something was going to happen with this.
But even if it failed, he would have still probably been a target, right? It's like, what are you trying to create? They could have gone after him, right?
Sure.
But yeah, no. So eventually, obviously, he figured it out, and he said I think there's a great quote by Satoshi. It's like, well, if you think about it, like if you buy, you might want to buy some because maybe if it catches on, it could become valuable, and that might. If other people see it that way, they might buy some because maybe other people will it'll catch on and they'll want to buy some, and that could become a self-fulfilling prophecy and really raise the price. He said it way more eloquently than I just did. But yeah, so he had some foresight. But the argument there is that there was it was unprecedented, and after 2 years into Bitcoin's creation, Bitcoin still was worth zero, and at some point somebody traded a pizza, and then the first price point was established, and then after that it started to trade in markets and so on. Whereas every altcoin after that has been created has entered a market where there's already an expectation of value, and that in a sense adds greed to it, and that greed starts to manipulate certain things, and it seeps into the marketing, and it has effects in the design. And very few currencies have actually managed to replicate, cryptocurrencies have managed to replicate that. So that's kind of where the market is at. I think and that's one of the qualities too that makes Bitcoin special, and no other altcoin has sort of managed to kind of catch that wave.
Yeah, I mean, so there have been other altcoins like Litecoin that didn't do a pre-mine,
Right.
Where
a pre-mine is when the developers or creators of the crypto
they issue themselves 20% and then
they say they create a bunch of coins right at the beginning, and they say, okay, this is 20% of the coins that will ever exist, and we're holding them. So Satoshi didn't do that, but he did mine a lot of the early coins, and so he is.
Yeah,
assuming he's still alive and still has access to them, he's the largest holder of Bitcoin.
Yeah,
which is fine, because he created it. But he
gave like
people
2 months.
Chance.
Yeah, he gave 2 months of advance. I mean, as much as you can publicize a
exactly.
cryptocurrency, right?
He launched the white paper. He published the white paper in 2008, like Halloween, I think, and then he launched the Genesis block January 3rd, 2009. Yeah, and so he gave people some time to prepare. Hey, this is how it's going to work. If you want to get in on this, then get in on it. And nobody got in on it except basically Hal Finney.
Yeah.
So
and this is one of the areas that's actually really, really important in today's context of crypto, because a lot of the altcoins. I think we're at the bottom of the market right now. It's 2019. We're past July, so we're at the bottom of the bear market. Or at least
definitely debatable.
We don't know where the bottom is, but we're deep in bear market as far as altcoins go.
Definitely. For
altcoins are hitting. Altcoins are hitting.
Bitcoin dominance is,
early ICO levels, or like they're hitting levels that they had before 2017, like 2016 levels of prices, And whereas Bitcoin is definitely much higher. So Bitcoin definitely had a dip in this price in this market wave, but it's much higher than altcoins. And so you might not hear the marketing waves that the altcoins had during 2016, 2017 saying, oh, we're a lot better, we have all these features, we have all these things. There's a lot of noise that comes from that aspect of the industry. And so talking about the genesis story of a cryptocurrency, it's actually really relevant, especially if there's going to be another wave of altcoins and crypto technologies that come out. A big discussion in crypto, I mean, we're talking about Bitcoin today, so I want to give people kind of niche, sort of insider sort of topics about crypto. One of the topics that people discuss in terms of figuring out which currency or cryptocurrency is legitimate versus which one is not is the supply, the genesis of the currency, right? So in the early sort of waves of altcoins, which is 2013, 2014, maybe 2012, I think the first altcoin was created probably, I don't know when Namecoin was created or Litecoin was created, 2012 maybe, I would imagine.
I think Namecoin
2011
was invented by Satoshi, so it couldn't have been after.
It's debatable. I
2010.
mean, he didn't implement it. He just kind of talked about it. He played a role in it.
Okay.
He kind of like defined how it might maybe it should be done. Yeah, but it was implemented by other people. I think Aaron Schwartz had a role in it and stuff. But
oh yeah, I think
he definitely had a big part of it. I don't know who wrote the code and launched it. I mean, who forked it specifically? It was probably Aaron, and there might have been another guy. But anyway, so a lot of the altcoins in cryptocurrency that you'll hear about, probably in the next wave of adoption, they're going to talk about the supply, right? And the key thing to understand is how many coins are there? How many coins did the founders get? And that's important because at some point they might be able to dump that in the market, right? And so they can sell at market value. So if the price goes up a little bit, they can sort of crash that and sell out and cash out at a higher price, right? And that's a lot of what ICOs are. So ICOs are like a sort of like a model of crypto issuance.
Initial coin offerings. That term is basically like shamed now, right? It's sort of like black sheep of, you know, there's a new thing called IEOs, I think, initial exchange offerings, which are like more centralized, I guess. I'm not sure exactly what they're trying to do. But you'll hear about that, and you'll hear other maybe like specific terms. And that's a key aspect of it. If you understand the way that the supply curve works, right? Who created how much, or how they are created, that'll be that's a telltale of the quality of the coin. So a lot of coins that are reasonably strong in the market today are coins that had zero issuance before the genesis, and the genesis started through proof of work. Proof of work is where you point your computer at a particular algorithm and you do what's called mining, and that's a very technical aspect that makes cryptocurrencies a kind of commodity, or certain cryptocurrency like Bitcoin a kind of commodity, where you have to spend energy and computing resources in order to win a complex game of mathematics and cryptography, and then maybe win a Bitcoin, and that adds security to the network. That's something that's technical, and we can talk about it at a different time. But that's really important, that the issuance is created through mining. And you know, you'll hear about other things like proof of stake and so on. But So I think one of the important implications of that, like kind of taking that a bit further, is, you know, however a coin is set up at the beginning is going to create the culture of that coin forever. So the way that Bitcoin was created, it was created by these very principled cypherpunks who were good at writing code, and you know they were engineers, and they were trying to create more freedom for people, and they weren't looking for, you know, fame. Maybe they were looking to get rich, probably, but they weren't looking to get rich quick. They were looking to get rich slow.
Yeah.
And so when you read about these ICOs, a lot of them are just like, you can tell how it's going to go by how they set up the ICO. If it's kind of like, hey, buy this ICO and it's going to go to the moon after a month, then you know that that's going to set up the whole culture for that coin, and you know it's going to be a failure.
Yeah.
After like 4 years, it'll be dead, you know, at most.
Yeah. The market will actually, like, the price on the charts will echo the emotional maturity of the coin, in a sense, right? So like, if it's something like pitched like that, right, at the right time, the price will go whoop and then crash. Right. Because people will FOMO in, fear of missing out in, and then they'll try to get out as fast as they can, and then they'll sell it to the bottom.
Right, because the people who FOMO'd in know that they're in it to get rich quick. They're not in it for the long haul. Yeah. And so they know that everybody else is not in it for the long haul. Yeah. And so they know that as soon as it hits the peak, they better get the fuck out.
Yeah, and that's kind of what people would call a pump and dump scheme, or or other sort of terms. They'll even call, like, you could even argue that that's a Ponzi scheme, right? And there's actually a lot of sort of Ponzi's in crypto, like specific, like explicitly Ponzi schemes, right? Like Ethereum's famous for this.
Ethereum, has Ethereum Ponzi.
They have created a bunch of Ethereum Ponzi's where it's like, you know it's a Ponzi, it's an honest Ponzi.
And you know it's going to collapse
at some point. And it's just
But it's a smart contract, and so
it
has to work in a like transparent way.
You can go on Facebook, you can go on certain Telegram groups where people will be exchanging tips of like, buy this right now, I'm about to advertise it on all these different places.
Sure.
Yeah,
like,
it's going to pump so hard right now.
Yeah.
But here's the thing: is if you get a message for free, a spam message, it is guaranteed that you are not an insider.
No.
You are not one of the insiders.
Right.
No.
Yeah. If you get a spam message, it's too late.
So I think this is a good way for us to transition into some more kind of interesting blockchain-y topics. As we've noted, the way that the rules are set up in the protocol actually affects the culture and the community of the people who are using
and the power distribution. The distribution of power is based on how many coins there are at the beginning and so on.
Exactly. And so, but basically, so the cool thing about, the exciting thing about Bitcoin is that, Bitcoin was the first one, and it has these particular rules in this particular protocol that you have to follow if you want to participate. But really, you can create any set of rules, and you can do the same thing that Bitcoin did with any kind of game, any kind of mechanism. And that's kind of how I see Bitcoin. That's kind of how I see human organizations. Is basically there's usually this kind of game at the center, which all of the participants in the organization are playing. And as long as the game is fair, this usually creates a healthy organization, because people know what to expect. They know when they do something bad that they're going to get punished. They know when they do something good, they're going to get rewarded. And so this encourages them to do something good. And this is one of the reasons I think behind Bitcoin's success, is because it has good rules that are enforced absolutely. And so if you're an honest miner, and of course you're incentivized to have as much hash power as possible. With great power comes great responsibility on Bitcoin, and so you're the more hash power you have, the more you're paid to process the protocol and to actually basically be the enforcer of the rules of the protocol. And so if you're this malicious actor and you manage to get a majority of the hash power somehow, well, Bitcoin is already paying you, half the money that's being generated on the network. And so if you decide to attack the network, then you're attacking your own wealth. And so that's kind of the mentality behind Bitcoin. And so anyway, so where I was going with that is that so the exciting thing is that you can use these blockchains and you can use side chains and you can use smart contracts on Bitcoin or other blockchains in order to organize people however you want. You can create whatever game you want. And so I think what's exciting about this is that we can try all of the games and see which ones make the best and most stable and most sustainable organizations, which create the most value for humanity.
What kind of games are you talking about?
So let me give you an example. One of the currencies that I supported earlier on in my career is called Dash, right? And Dash is a really interesting example of, in the context of what you're talking about, but also what we talked about earlier. So Dash is a fork of maybe Purecoin, or Litecoin is a fork of Bitcoin. So it's sort of very similar to Bitcoin. And
I think it started out as a Litecoin fork. I could have that wrong. There might have been one.
Maybe, right? Like
X11 coin or something.
Yeah. So X11 has this different sort of, it's a proof of work algorithm and so on. A lot of technical details there. But one of the things that they did was, there's a couple of controversies in that. There's controversy and a very interesting thing that they did. At the genesis, there was there was a bug in the mining which created a bunch of units, but it wasn't an explicitly here's the founder reward, we're going to take 10%. There was a bug in the code, and too many, way more than there should have been created, were created at the beginning. Now, I don't know how much of the percentage of that was, but it was a significant amount, right? And then because the mining had already begun, because it was supposed to be a proof of work, sort of fair distribution kind of coin, then they just kind of kept going with it and ended up sort of being, kind of talked away and argued away, and that's an area of thought that you'll hear about if you look into Dash, right? And if you hear
fear,
that
uncertainty, and
fear,
doubt.
Uncertainty, and doubt. It's great, important slang. Just like HODL means just to hold the coin and not sell it ever, or for a long time anyway. And then okay, so that was one thing. But then that set up the currency sort of survived that, and then eventually they set something up which is they grab part of the supply. So every like 2.5 minutes, certain amount of Dash coins are created, or were at the time, and I'm not sure what the consensus rules are these days. And a portion of that would go to this sort of smart contract pool, that like script that was built on top of Dash, where people could vote with their coins in order to try and reach a consensus about what that money should fund. And it was a way to create essentially a governance strategy, or a kind of like sort of corporate interest and more manual focus as to where the money should go, rather than have all the money go to specifically the network hash rate security that proof of work sort of deals with. And that's an interesting example of setting up the rules in a slightly different way. So what that produced was a kind of semi-political system inside of Dash, that where there's a guaranteed amount of money coming into this smart contract, which is going to be valued in Dash and is going to float against fiat, right? And how that money is invested will have an impact on, in theory, will have an impact on the growth of the currency itself, right? And in that sense, it's kind of like a cryptographic corporation that has human input in its growth, right?
Yeah.
And the idea was very interesting, and it definitely caught my attention at the time.
Yeah, so just to summarize it in a different way, the way that I see how Dash works is it has this proof of work system, like Bitcoin, but on top of that, it has this proof of stake system where you put a certain amount of money into what's called a master node, and your master node can do special things that other nodes can't do because it has this threshold of 1,000 Dash, I think. And if you have at least 1,000 Dash on your master node, then you can become a master node. Mm-hmm. And a master node can do this voting on propositions thing.
Yeah.
And so the work in Bitcoin, the work that happens, this hashing work, just goes to the miners, and the miners can literally use it for whatever they want. In Dash, they wanted to create more of a corporation or a government where the work is basically taxed. And half of the work goes to these master nodes. And then the master nodes are supposed to do things that are good for the network.
What you get in Dash that you don't get in other cryptos is stuff like Dash sponsors different media outlets.
Right, exactly.
Dash does charitable work. Dash does its own marketing and advertising that's more deliberate.
Right, and so you get this like collective fund every mining period. You have this treasury, and then the people who are kind of the most invested in the network get to decide what to do with the money in the treasury. They'll do things like have booths at conferences and hire like babes in bikinis. Which,
I've never seen Dash do that, but maybe.
I haven't seen them do that either, but they've done a lot of Dash has gone into marketing, and I think it's a sad sort of reality of it. I don't know how much has gone into product development or other things that would make a currency be a currency. Their goal is very specific to be a currency. They had some interesting privacy features back in the day that Bitcoin didn't have. That were they were good. They were good effort, and they were certainly debated by some Bitcoiners and so on. And then eventually they added another feature which was in theory faster and more secure than Bitcoin, and and that's called the instant sending, instant transaction. So they were optimizing towards being a currency. And even today, you'll hear about them. They're trying to sort of influence Venezuela and kind of get adoption in Venezuela, and they've had some success. And but part of the funny thing with Dash in particular is that there's been so much effort in marketing that there's like this whole internal economy and media industry inside of Dash talking about Dash that nobody else ever hears about because it's just this little bubble of Dash. And and I've actually been disappointed with their success because at some point they had $30 million a month to do whatever they want. There's a peak in the market, right? And so if having a centralized treasury that people that are invested in the growth of the currency can decide where to go, and that's not enough to sort of drive the adoption of a cryptocurrency, then we really don't understand what current cryptocurrency, how currency happens, and marketing has not been enough, and Dash has done as much marketing as anyone.
So two things. I think the reason why Dash hasn't caught on is because they've been promising the system called Dash Evolution, which was going to use the master nodes in order to create this amazing API that was going to create like accounts and and like
Basically
this
social
really
network.
slick interface and storage and social network
be a
and all
social
that.
network.
And
Actually
they
have
never delivered on that.
Yeah.
And you think they have $30 million a month, they should be able to pay some developers to build this.
Yeah.
I thought their Masternode thing was genius, and their system of quorums and stuff. And we can get into that. But
I have an
with
interview with the founder of Dash where we talk about all of that, and it's from 2014. And they're trying to build like a social network. Where you can sort of, among other things, you can, bring user experience to the next level, and they have.
Yeah, I talked to Evan Duffield
Evan
in
Duffield's great.
2015 about Dash Evolution, and he was telling me all about, this is going to be great. I decided to buy some Dash right after that. But again, they never, ever delivered on that. And it's like all they do now is they spend money on marketing. Yeah. But so my point is, with all of this, is that so you can create these games, right? So cryptocurrency is a new type of game where there's no referee. The rules of the game are enforced by the network in this kind of diffuse way, where nevertheless all of the rules are strictly enforced and everybody has to follow them. Right. So the thing is, if you create a protocol that's too complicated, generally what happens is that somebody figures out how to game the system to their advantage. And then at that point, the protocol just kind of there's the people with the most power in the network are actually not working to advance the welfare of the other players in the game. And I think this is what you see with any sort of dying human organization. I think this is what you're seeing in Western civilization right now. It's the people who actually have the most power are actually using that power for their own gain rather than to advance the welfare of everybody who's participating in the game. And so I think that Bitcoin is not like this. I think that Bitcoin is such a simple protocol that it's ungameable. And there are definitely problems with security in Bitcoin. There's problems on the edges, and people have to be competent enough at information security in order to play the game well. But I think that the game is set up in a very solid way, such that it's very, very difficult to subvert the entire system for your own gain.
I agree.
But I think there are other potential coins that could also do this. Litecoin, for instance, I think is a perfect example. Litecoin is basically, silver to Bitcoin.
I call bullshit on that. The only reason that there's silver and gold is that gold is too valuable throughout history to use as everyday currency for basically poorer people. And so silver filled in a divisibility demand for gold. And that's the only reason silver exists.
But that's what Litecoin does for Bitcoin.
No, it doesn't. You can send.
It has a faster block time. So you can send smaller payments.
No, that's not true. So yes. So Litecoin has a shorter block time, about 2.5 minutes per block. But from a proof of work security perspective, you still have to wait about an hour for it to be basically reversible, right? You can argue
but
that
it doesn't matter
minutes.
Because the payments are smaller. If you're using Litecoin, you're not going to buy a house with Litecoin, but you can buy a coffee with Litecoin. And because Litecoin's, basically has effectively, I don't remember if they doubled their block size, but basically they have at least 4 times as much block space as Bitcoin.
Yeah, they did. Yeah.
And so their fees are 0. I mean, I don't think the Litecoin blocks are full even now.
Well, the fees are 0 for any altcoin that doesn't have high demand. The moment that there's high demand for the blockchain, that's where fees rise, and that's fees are a sign of demand in a sense, right? Because 2 megabytes of block a minute are not that much, right? Even if you have, if you have 4 times the block issuance, right, and twice the block size, you have many times the
you can
space.
confirm 8 times more.
But then it's also gonna centralize more in network.
I was going to say, we should back up for a second. There's a limited amount of space on each block for a limited amount of transactions to be able to go through. Bitcoin is very popular, so one of the major problems with Bitcoin, or I see it as a problem anyway, is that the blocks all get full. So in order to pay for your space, for your transaction to be included, you need to pay a relatively large fee. A fee that, depending on the demand at any given time, is often large enough that it doesn't make sense to buy everyday consumer goods. With Bitcoin.
Correct. So the average fee is something like 5 cents.
Yeah, right now the fees are pretty low because demand for blockchain.
Yeah, there was just a spike.
But a couple years ago.
There was a spike for 2 months, that was widely publicized.
Yeah.
But the idea,
But it will happen
the
again.
idea
It
of
will
Bitcoin,
happen again.
Yeah.
if you want Bitcoin to succeed, if you want it to be a global currency,
Sure.
there's going to be way more demand than there ever was in 2017. And in 2017, it was so unbearable, it was so expensive and so slow to try to get a transaction that basically, like half the places that had adopted Bitcoin stopped using Bitcoin.
Right. Right. And so this is why we're building the Lightning Network now, because the Bitcoin blockchain can accommodate about 7 transactions per second, which is nowhere near what it would need to be for basically
For global
global
commerce.
adoption.
Yeah.
And Andreas talks about how the internet went through similar problems. It was like, okay, well, clearly, we're not going to have, clearly we can't have everybody using Usenet, and then it scaled. And then he was like, well, clearly we can't have, everybody using alt groups, and then clearly we can't have everybody using email, and it's clogging up the internet. It's going to fail, and it kept doing this, and then we had cat videos, and we had Netflix, and we had VoIP, and we had all these applications that were, at the time that they came out, they were clogging the internet. But then people wanted the internet to work, and so they found ways to solve those problems. And generally, the way that they did that is they separated things into layers. And so that's what Bitcoin is doing too. We're building another layer on top of Bitcoin so that the Bitcoin blockchain itself is a settlement layer, and then the payments can happen on this kind of layer above.
Yeah, and that's called the Lightning Network, and you're going to hear a lot more about the Lightning Network in the coming years, and it sort of solves that problem to a great degree. It adds some more complexity, but if you want to do payments, it's going to be a lot more efficient for that.
Yeah.
So
let's transition to some kind of like really exotic things that blockchains can do, and like basically, I think one of the reasons why people are excited about Bitcoin is that it's not just better money, it's not just better gold. There's actually it's programmable money. And there's all of these potential applications that you can do with Bitcoin or blockchains that you could never ever do before the invention of Bitcoin. And so, do you guys want to talk about some of those?
Sure.
Do you have any in mind that you want to talk about?
Yeah. Well, the smart contracting or sort of like innovative aspects of Bitcoin that interest me, I feel like are not as exciting as some of the stuff that's been pitched. Right. I'd be curious to hear what examples you're curious about. But one of the things you can do with Bitcoin is you can create contracts that are cryptographically enforceable, and Bitcoin will just enforce them like a computer would enforce a sort of binary sort of. It's either yes or no, and that's it, and there's nothing you can do about it. And there's a lot of power in that if you set it up properly. You can I think build societies that are rock solid in a sense, and that are immune to political coercion and political manipulation. And that's where the libertarian sort of ethos of Bitcoin sort of kind of starts to seep in. The thing about Bitcoin is that it's not a libertarian currency. It's not a currency. I don't think it is a tool of political ends. Bitcoin, if it's going to succeed, it has to be a currency that enemies are going to use. Like communists are going to hold it because it might, help their agenda just as much as capitalists and ANCAPs are going to use it. It's going to be inevitable, or sort of, it's going to have to be something that you basically must use for practical reasons, even if you're not forced to use. Well, and that's the only way that it's going to reach actual adoption, because political consensus, like for it to reach its final form in a sense of a kind of global internet money, it has to scale beyond political boundaries. And so I have a political agenda. You have a political agenda. A lot of people have political agendas everywhere, but it's gonna have to escape that. And so the cool thing about Bitcoin is you can program it to do more or less whatever you want.
Bitcoin is politically neutral
within the boundaries of the supply. So it's certainly not going to be Keynesian money. That's one thing that Bitcoin cannot be.
Bitcoin is not going to be Keynesian money. It's going to be borderless.
Yes.
It's going to promote privacy, hopefully.
Maybe
not Bitcoin, but cryptocurrencies in general. Yeah. It's money that's not easily taxable. It's money that's not easily controllable by governments. When I say that Bitcoin is political, I don't mean that only libertarians are going to use it. What I mean is it was not completely, but primarily created by people who were libertarian leaning and libertarian thinking, because they wanted certain libertarian ends to come of people adopting Bitcoin. And no matter if you have communists using it or Democrats or Republicans or libertarians using it, if Bitcoin or crypto or something like it catches on, It's going to take away the power of the state to print money, and it's going to take away the power of the state to regulate trade in huge ways.
Yeah.
So one thing that Andreas points out that a lot of people don't realize is that the internet functions on the same principles that Bitcoin functions on. The cypherpunks who created Bitcoin also created like SSL and encryption on the internet, and domain names, and like the people who made the internet are the same people who made Bitcoin. And so I see Bitcoin as politically neutral in that it doesn't seem to, like, yes, libertarians are happy about this, but I think that everybody is happy about this, because what it does is it well, except for like authoritarians, basically.
Yeah.
I think a lot of people are very unhappy about it.
Well, yeah, people who are afraid of too much freedom, basically.
Yeah.
Right. So like people who are not libertarians.
Well, I guess so. But what I mean is anybody who likes the internet would probably be all right with Bitcoin. It's the same idea. The internet liberates information, and it also does this flattening of power. Bitcoin does the same thing with information and money. Bitcoin liberates money in the way that the internet liberated information.
I don't think most people want the liberation of money.
I think most people haven't thought about it.
Yeah. I think people.
I think if they heard about it, maybe they would.
So one of the things that's interesting about Bitcoin is that it actually acknowledges greed in the human heart and then leverages it to bring about, I think, a better world. And while there's certainly people that will politically not like the consequences of Bitcoin, they might prefer a controlled economy. They might prefer a small group of political sort of elites or academic elites to dictate, economic policy. Personally, if they buy some Bitcoin, they might still win, right? So what Bitcoin arguably did is it broke the state monopoly over currency. And similar, this is an analogy that's been made before, similar to how the Gutenberg press kind of broke the monopoly over the printing of books and the writing of books and so on, right? The printing of books, right? So anybody could sort of get this machine and then print their own books. And
before the press, it was the writing of books. Like people didn't print stuff before.
Yeah, they didn't even know how to write.
They just wrote information. And so, it was very, very difficult to get your hands on anything academic at all,
right?
Because it was handwritten.
Yeah,
Right.
and a lot of times it was monks and monasteries that were doing the writing, so a lot of what was published by the church, because they were the ones that had the funding to, like, push out a lot of Bibles, basically.
Yeah.
Or whatever they wanted to push out.
Exactly.
Yeah.
So I think that, from the point of view of certain political ideologies, Bitcoin might seem political, but Bitcoin actually, the cool thing about it is precisely that it does not care what your politics are.
Yeah.
So if you're an authoritarian, you can use Bitcoin if you're an authoritarian. You just won't have as much power as you did in the fiat system.
Yeah, Bitcoin doesn't care what your political ideology is, but by using Bitcoin, you're promoting libertarianism in at least one sense, at least in the money sense.
Yeah, I think one of the things that we did a couple of episodes on a book called The Sovereign Individual, and it talks about how the economics of basically the internet changes the economics of violence, because in the digital realm you can have assets that are purely in the digital realm, and there's actually no way to violently take those assets. You can take those assets using hacking or other techniques, but basically violence doesn't pay the same premium in the digital world as it does in the physical world.
Yeah.
So the point that the Sovereign Individual makes is that with digital money, you can own assets in the digital realm, and there's no way to use violence in order to steal those assets from people. Whereas in the physical realm, you will always have the ability to go after somebody violent if they have some asset that's maybe like gold or cash or something like that, or a Bitcoin seed or something like that. Or you might be able to like extort them by threatening them or something like that, which will always be possible. But again, what digital money does is it allows the growth of wealth in the digital space, in the digital realm. And so what that means is that wealth is going to migrate from the physical realm into the digital realm.
Can you clarify what you mean a little bit right now? Because like the vast majority of money is already digital. Like most fiat currency is digital, so it's not digital. What I mean is digital property.
like property that is immune from violence. So like your wealth is based on information. So there's actually, before Bitcoin, there were websites. So websites are a particular type of digital property, which they're just information, right? If the FBI shuts down your website, if you're Julian Assange, you can probably figure out a way to put it back up on a different server. And so the government has control over violence in the physical realm, and so they can affect the digital realm, but they can't. They don't have as much power over it as they used to. And so there's this kind of divide of digital assets and physical assets.
Okay, so the reason why I'm taking issue with this is because it's not about digital assets versus physical assets. It's about centralized assets that are stored within institutions versus assets which are stored through like this decentralized protocol, which is what Bitcoin does and cryptocurrencies do. Like the vast majority of money that people hold right now is digital. Most US dollars that are in circulation it's just digital ledger. It's just the fact that those ledgers are controlled by banks, which are particular institutions.
It's both. You're both right. So another aspect of the way that the financial system works today is there's a lot of digitization of the financial system, because the internet is very efficient in communicating things, but it's still secured by means that were designed before the internet.
Yeah.
So in many ways it's secured by the physical realm. So the American dollar is protected arguably by the Pentagon, right? And its supply is there's a lot of politics behind that, and we can talk about that at maybe a different time. The way that you prove your ownership in money is through your biometric self. So you gotta have your legal identity, and then you gotta sort of show that you are that person, and that's attached to a picture and a date of birth and a location. The ownership in fiat is about the physicalness of it. Everything about ownership of fiat is physical, whereas with crypto, you can have a passphrase, a 10-word passphrase in your head that has control over currency, and that's the only tie that's established to that money, and that's all that's necessary. And in that sense, it's purely information based, and that changes the game theory of violence. I think with the proliferation of the internet, new forms of aggression have developed and will continue to develop, but the game changes in a very fundamental way. You can have Trezor, which is a hardware wallet and a company that has had one of the biggest impacts in cryptocurrency security, and I think digital security in the recent years, is a tiny computer that is designed to protect your cryptocurrencies and your Bitcoin. And they just came up with something called the Shamir backup. So to back up a second, when you create a Bitcoin wallet, the Bitcoin wallet will give you a set of words, usually around 24 or 18 to 24 words. And then you got to write those on paper and put them somewhere, right? And that's a kind of tied to the physical, but then you also have this hardware wallet. It's also here. And so if you lose your backup, you can still send the money. If you lose the hardware wallet, you have the backup. And with that backup, you can regenerate the Bitcoin wallet, right? Now, what they did just now is they released something that lets you grab that backup, those 24 words, and split them up into 3 in a way that they're redundant. It's not just cut it into 3. They have a kind of redundancy. So you can have one piece over there, one piece over here, one piece over there. And with 2 out of the 3, you can restore the wallet. And so you can essentially multiply the storage of money, and you can make it redundant, right? And that changes the game theory of violence, right?
Yeah.
Because you can't just take over one piece and then control it.
Yeah, it doesn't eliminate violence, but it reduces the benefit of violence so much that it disincentivizes people from learning how to be violent in the first place.
I think a crucial point here is that, like, with previous forms of money and even our digital money that's stored in banks or what have you, like, your money, the reason why the person that I'm sending digital money to, like with US dollars to, knows that I'm good for the money is because they trust the institution that's sending the money. They trust the bank. The reason that we know that I have money in the bank is because the bank is like a trusted institution. It's regulated, yada, yada, yada. With Bitcoin, it's built into the protocol itself and everybody trusts it, but there is no Bitcoin institution. Like, banks solved a big problem for us because they were able to hold our deposits and we trusted that they were good for them. They weren't really with fractional reserve. But based on the fact that we trusted them so much, that gave them a lot of power over us. Mm-hmm. With Bitcoin and the way the protocol is set up, there's no institution that's being given this power based on the fact that we're all using it.
Yeah, there's institutions that have risen in the wake of Bitcoin that fill that demand, and those are the Bitcoin exchanges or cryptocurrency exchanges.
And that's where a lot of the hacking happens.
Well, that's where some of the hacking, certainly a good deal of the hacking has happened throughout the history of Bitcoin. But they're set up like banks. They're custodial. They actually follow banking regulation in many ways, and so that they feel that. But there's no fiat authority. They're chosen by the people, and they fall by the grace of demand and supply and demand. So they are market institutions, even though they're regulated by governments, and so they have to implement government grade regulations. So the hacking of exchanges has happened because there's a lot of Bitcoin stored in one computer system, right? And that's a very big target for hackers. And unlike fiat, you can reverse Bitcoin transactions. And so those exchanges are subject to the laws of Bitcoin, so to speak, the consensus rules of Bitcoin, and they just have to deal with that. So that's one way that that Bitcoins have been stolen. And then the other one is just people failing to protect their Bitcoin. So they'll just leave their wallet on a laptop that's really generally insecure. Computers are generally insecure.
Especially if it's a Windows laptop.
Yeah, and so malware will just sort of take it, right? So that's why we've developed some things like hardware wallets and so on.
Yeah, the upshot of all this is that yes, there's no way to completely secure information. If the information is useful, then there will be ways of learning it. And so what Bitcoin does effectively is that every large concentration of Bitcoin that's being used actively, so especially exchanges, and maybe cold storage if you can, track down who owns it, but that's much more difficult. But basically, large concentrations of Bitcoin are disincentivized in Bitcoin. Mm-hmm. So basically, too much power is disincentivized in Bitcoin. And so the world that I see that's gonna emerge from this is kind of like we have Bitcoin as kind of like the gold standard, and we have fiat over here as kind of like government money. And Bitcoin is anonymous. It can be used relatively anonymously, and it can be used relatively transparently. You can do things that you can't do in the banking system that you can do on Bitcoin. It's pseudonymous, exactly.
Pseudonymous.
Yeah. So basically, So each address is a pseudonym, basically. And so you can say, that's my address, and you can actually prove that it's your address by signing a message from that address. And so you can't do that in a bank. You just, if you want to know whether somebody has money in the bank, you call up the bank and say, does this person have money in the bank? And they'll probably just be like, we're not going to tell you. Mm-hmm. But maybe if you're, a government or something like that, then the bank will tell them. But with Bitcoin, you can tell everyone. You can just say, that's my address, and you can even make a vanity address, and you can definitely 100% tie yourself to an address, or you can kind of 0% tie yourself to an address if you're extremely careful.
But in general, there's ways to maintain privacy in Bitcoin. It's just
right. So you can select how much and to whom you want to divulge this information.
Yeah, and that's a really interesting sort of piece of the nature of Bitcoin is that it's kind of neutral in terms of privacy, right? In the early days, it was marketed as an anonymous currency, and to some degree it was because people just didn't know how to track it. But then as tools developed to track money flow in Bitcoin, and as exchanges started to collect more data, and that data started being shared among institutions and so on, that anonymity started to basically erode. And so now tools have been developed over time and are continuously developed to anonymize further. And so there's something like Wasabi Wallet, which is a Bitcoin wallet you can download that will mix your coins and make them more difficult to track. And then there's a bunch of different things that you can do, right? And to some degree, so you have to kind of take effort to both become public and become private in Bitcoin. And that's kind of a cool thing about it.
Yeah. So anyway, but looking into the future, the way that I see this playing out is that I used to be like, hyper Bitcoinization. All of the governments are just going to buy Bitcoin, and that's going to collapse all the fiat currencies. I see that maybe in the near to medium term, because governments are just inept right now and they just don't realize how things work. But once they figure out the game, fiat currencies are not just going to go away. I think what's going to happen is that fiat currencies are going to become better, and they're going to, in order to compete with Bitcoin. Governments will have their work cut out for them to make their currencies competitive, but I think they can do this by not creating so many units. and by actually using the government's money to invest in things that are good for that country, that will actually increase its prosperity over the long term. So I do think that this kind of hard money that's coming into the world is actually going to force people and it's going to force governments to have a lower time preference and to plan more for the future. That's why I definitely think that Bitcoin has a positive future.
Yeah. And that's I think also what is valuable and good about Bitcoin is that it takes power away from nation state currencies and forces them to compete against each other against something that's politically neutral. Yeah, I mean, I think there's people that think that Bitcoin is just going to completely destroy fiat. I don't think that's going to happen either. I think it's going to be a long time before that happens. I would even say midterm. I would say like long term that might happen. I think Bitcoin has a kind of quality that because it's fundamentally scarce and because it's so secure, like Bitcoin's hashing power, its computing network that protects its consensus rules is the most powerful computing network in history as far as hashing power and so on, and that's a technicality that you can look into. It's basically a massive distributed rock that you can build societies on top of, and similar to the example of Dash that we talked about earlier, where you have this sort of politicized treasury that's voted on, where its spending is voted on by the participants. You're going to have fiat currencies that are politicized by nature, that are going to try to innovate and fill the gaps of investment, let's say, in their cultures and their societies around Bitcoin. But they're gonna be limited by Bitcoin, because if they hyperinflate their currency, Bitcoin is gonna shoot up, and then civilians are gonna be able to get into Bitcoin and escape the collapse of the currency. So it's going to limit how much governments can issue fiat in order to do whatever the particular political elite wants to do. That actually raises a barrier against political corruption. And that's, I think, where the good of Bitcoin is. How debatable that is politically, we can talk about, but I think historically it's a very powerful thing.
How do you guys see Bitcoin getting to that level of use, or like that level of power where it could actually have an impact on the way that fiat currencies run? Because the main hurdle that I see for Bitcoin is, sure, like people who are engaging in illegal activity already will be drawn to use Bitcoin because you can use it anonymously if you want to. You can use it internationally. It's all online. It's not tied to your name necessarily. But for the vast majority of business that goes on in the world, like legitimate business, it's still going to be linked to physical goods. And whenever you have physical goods, then you have a government jurisdiction that has power over that and can ban a company from accepting Bitcoin. So how do you see Bitcoin getting to a level where it could change anything at all?
Mm-hmm. So that's a great question, and I've thought about this a lot. And I do think that one of the biggest things that will enable Bitcoin to succeed are other decentralized technologies in the same vein as Bitcoin. So things like decentralized drone delivery systems. So if, as you said, there needs to be a physical product. If I'm buying a physical product from you, the government can probably surveil that. Well, maybe if you prepare the product at your house and you send it to me with a drone, then the government doesn't need to be involved in that at all. And so we can do an anonymous payment or a pseudonymous payment from me to you, and then basically an anonymous delivery of the physical good.
Well, sure, but this is all still underground activity, which I don't think is going to make up the vast majority of, or I don't think it's going to make up very much economic activity in the near future.
But it will make up but the government won't have a complete picture of everything that's happening. I totally agree with you that the government will surveil most activities still, and that's why I think fiat currencies are not going to die, because there is a demand for that. There's a demand for the government to surveil physical. The physical realm will still exist. Like it's not like all of the wealth is going to go into the digital realm, at least not at first. Maybe far in the future when we have replicator technology, like in Star Trek, where you can just create physical things from energy. Maybe at that point, the government won't have much power. If that technology is widely dispersed. But yeah, until then, the physical realm will still exist, and the government will still be tasked with making sure that people are following the rules and not being violent and all of that in the physical realm. Mm-hmm. So, at least for the foreseeable future, the government will exist and surveil most business activities. I definitely agree with that. However, they won't be able to surveil stuff to the degree to which they do today.
So do you think that Bitcoin is only going to take hold in areas that are not under government jurisdiction, the black market kind of
I
stuff?
have a different answer to this question. So one of the aspects that we're talking about here is sort of the libertarian ethos in Bitcoin. And just a fun fact that's relevant, and I'll just sort of step back from, is that a great deal of mainstream libertarians today are actually like deep in altcoin land and not really Bitcoin. And Bitcoin is different than the altcoins, right? And so how much libertarian ethos is there? It's an interesting question, and there's certainly still a good amount of that. As far as how it'll reach adoption, I think going to war with governments as in order to reach Bitcoin, to reach Bitcoin adoption is going to be something that nobody wants to do. So governments might try, right? Like India's trying to ban Bitcoin, but Bitcoin is it has a kind of grassroots dissident nature, right? Like it's very difficult to stop. You have to kind of like heavily surveil and control the internet to be able to stop the flow of Bitcoin. And so underground markets and black markets will continue to develop in Bitcoin to allow its flow. And the vast majority of the marketplace globally is black markets and gray markets. The white market, so to speak, is a large minority of the marketplace. So yes, corporations and companies that are big enough will have to comply with certain regulations, but we live in a world where jurisdictional arbitrage is a reality. And I think, in the current geopolitics, we'll see how that continues to play out. I think that'll continue to be a thing where you can just be like, well, I'm just going to be a company over here. And to some degree, you can sell goods globally, and sort of, there's a whole trade war and so on. So I don't think you can really win this through sheer conflict against government, because government by nature is a concentration of power. I think the way that it's going to be won is culturally, and culturally means that politicians are going to start buying Bitcoin because they're greedy, and because Bitcoin is likely to continue to go up. And even if one country bans it, that gives an incentive to a separate power or separate country to sort of open space for it, and those countries will safeguard themselves within geopolitical sort of power boundaries, right? And it's very liquid. Bitcoin will very liquidly adapt itself around the world to continue to grow because it pays for its own growth. So I think culturally is one of the areas that is not very explored. It's not explored enough, and I think that's where one of the great powers of Bitcoin is. It just appeals to people's greed, right? And it's subversive in nature.
Right. So I definitely agree with you that Bitcoin is kind of liquid and it routes around these friction points that governments cause. And you see black markets appear whenever there's a significant difference between the free market and the white market, as you call it, like this strictly regulated market. However, I think your answer kind of assumes that the government is going to it's going to screw with the free market in some way. If there's a government that is willing to legalize all activities that people want to do within reason, then businesses are going to want to come there and do business there. As long as the government is running a fair operation that produces value for everybody who participates in the system, then businesses are going to want to come to that place and do business there. And maybe the government, maybe some forms of business are not actually desirable, and banning certain activities is actually conducive to economic growth. And I think that's true. I think that's definitely true. I think that the government is tasked with doing that, with basically being the consensus mechanism, the rule enforcement mechanism in physical meat space. And so, governments can be bad, like North Korea, and whatever. So government.
Russia,
Venezuela. Let's take Venezuela as an example.
Yeah.
So Venezuela has all these price controls. It has just all these rules that you have to follow, all these taxes that you have to pay, and there's just all of these black markets in Venezuela because that's the only way people can survive. And so Bitcoin will be there. Wherever there's kind of these gray markets or like black markets in order for that exist because people need them, Bitcoin will be there in order to provide that service. Bitcoin will also, be usable in the white market, in certain jurisdictions, maybe hopefully all of them. There will be good, healthy white markets, and there will be bad, unhealthy white markets.
Yeah, I think there's a really interesting assumption in libertarian sort of thought, in modern libertarian thought, that we're kind of bumping against right now, which is that it's the ethos that Roger Ver, for example, has printed in his Bitcoin coins, right? Free the market, free the world, and that's I think an idea and a meme that is it's very prominent in moral libertarianism. But I think there's some problems with it, right? So you could argue that there's market demand for some of the most horrible things that humans can do, right? So we're in the wake of the Epstein scandal, right? There's market demand for sexual slavery and human trafficking and even worse things, and people are willing to pay for it, and that those motivations will probably continue. Hopefully, they will lessen, but they will probably continue. And today, the vast majority of crime is paid for in dollars. And if Bitcoin became a dominant currency, global currency, it'll start getting paid for in Bitcoin. And those moral standards will have to be enforced in some way, and governments will continue to form, whether in their current form or other sort of, people will continue to organize to fight evil, and that will happen despite Bitcoin. The problem is that they won't have top-down control over the money supply. They will have to actually do investigative work and then actually have good reasons for their engagement in that.
Yeah, a scary thing too is Bitcoin is going to enable those kinds of things on a much greater and easier scale. Just because it's much easier to have economic exchange like at distances and not necessarily physically, and not having to carry around stacks of dollars. Like right now most of those things happen in dollars, and a lot of it happens in cash because you don't want to be able to.
I mean, if you look at the Epstein scandal, that's a counterexample.
I think it's debatable, yeah.
Basically, if you have enough money, you don't have to carry around bags of cash.
Enough lawyers and legal trusts and corporations can hide your
True, and a lot of banks are very corrupt and might even be in on it. So
they'll take a cut and they won't ask any questions. Yeah, they'll just be like, "We don't know what you're doing. We don't want to know.
Yeah,
you have $1 billion. We're happy."
Yeah. I think we don't really know exactly how this is going to play out. That's one of the things to understand, is that there's no Bitcoin experts, there's no cryptocurrency experts. Right. This thing is there's technological engineers that are expert at the technology, but that's different than understanding sort of the complexity of all of the human experience, right? Like the geopolitics of it, the enforcement, the moral aspect of it, right? And what drives people to do certain things. So there's one axiom in the sense that I stand on, which is that if the whole world wants to screw you because the whole world hates you, all humans just fucking hate your guts, in theory you could still keep them from getting your Bitcoin because you have the Bitcoin in your brain wallet, but you're certainly not going to be able to spend it or use it because they'll just screw you, right? Yeah,
and actually that's
a
good segue.
Yeah, and so that's sort of the limit. Those are the limits of power. If you're a terrible, if the whole world hates you, they're gonna find a way to get you, right? And so as a good person, you can hide in the crowd, but as a very high profile bad person, you're gonna be found. And staying anonymous in Bitcoin is a race. So you have to race against other engineers. They're gonna start tracking you. And so if exchanges are ratting you out, and the guy that you bought Bitcoin from is ratting you out, and people start publicizing what they know about you, then they're gonna find you. And so I think the way that morality will be enforced in a Bitcoin world will be much more interesting, and I think much more fair, because today's world allows for political corruption. For example, in the Epstein case, where people just kind of like, we're just gonna stand back, and all the records are private and sort of controlled by legal sort of power and hidden and so on. Whereas with Bitcoin, all the records are public, and privacy exists by hiding in the crowd. It's a different paradigm. It's hard to say how exactly it's going to play out, but it's a different paradigm.
So this is a good segue into kind of what I was trying to bring up earlier, kind of these exotic new applications of blockchain technology. An idea that's been around since, I think, before cryptocurrency, it was invented by this guy named Jim Bell, is this idea of assassination markets. And it's very controversial. It's basically the idea that, kind of like what you said, there's this person that's totally evil, there's all this evidence about how evil they are, and like a ton of people hate them, and maybe there's even some violent people who are willing to kill them for hire or something like that. And what you can do with anonymous money is you can basically have a bounty on somebody's head, and you can have somebody go and kill that person and claim the bounty. And so this is what's called an assassination market. And so
Yeah, we're assuming that the assassination target is evil, but they wouldn't have to be.
They wouldn't have to be
It would
evil.
just be anybody that enough people would want to kill.
Just anybody that has a big enough bounty on them. Which this is one of the things that freaks me out the most actually about crypto is like that stuff like this would be possible.
Yeah.
And we'll have to see how it plays out, but it seems like it would be difficult to stop. It seems like once somebody builds something like this, it actually will be kind of difficult to stop.
Anonymous Kickstarter for assassination.
Yeah. So this jumps all the way to the really crazy, but of course one of the things I'm most excited about with Bitcoin and cryptocurrency is how it liberates crowdfunding. And so you can crowdfund anything with Bitcoin. You can crowdfund a government like Dash does. You can basically just say like, hey, and actually I thought this may be the optimal way to run a government is just have like bounties on certain problems being solved, and then just have the government invest in those things as some threshold is reached, and then somebody in the private sector can bid, and then solve the problem, and then they get paid by the public's money, and then whoever put the money into the crowdfund can own a piece of whatever gets produced. So I feel like I feel like Bitcoin makes money much more efficient in mostly very, very cool and awesome and positive ways, but also potentially in very negative ways.
Yeah, I mean, assassination markets are fascinating. Yeah, very controversial topic. It seems to me, just thinking about it, that it's kind of like a gravity well for aggression. It's like any government agent that has any sort of FBI or anybody like that, any politician that would be concerned about ending up on that list, at the moment that this thing starts to rise, would be like hit it and then just throw everything at it. And that may be why, to my knowledge today, that this hasn't actually risen. There isn't actually an assassination market. I think they will probably happen, and I think eventually somebody might be motivated enough to create one.
But what do you hit it with?
Well,
how do you even know where it is?
Well, people have to find it to put money in it, so there has to be a path to it.
But what I'm saying is, what if it's a decentralized application that's hosted? What if it's sharded and put all over the globe?
Something like BitTorrent, right? Like it's a BitTorrent client that lets you access an assassination market, right?
Yeah, or what if it's like Bitcoin? Well, like there isn't actually a way to shut it down without shutting down all of the nodes.
People will poke every single aspect of something like that, right? So one thing you might do is you would get in there as the FBI and you put a target on the head of every engineer that works on the assassination market, right? And so then they all have to go super dark, right? Something else that might happen is, I think to some degree this might happen. And this is not the first time that an assassination market probably has existed. I mean, one of the things that's interesting about Bitcoin is that as it works today, and as it's likely to work in the coming decades, it'll mirror the cowboy era of the American sort of history, right? Where there was bounties. You could put a bounty of somebody's head. To some degree, those bounties were government issued, and I would imagine there's private bounties. And anybody that has enough money and is loud enough and makes themselves a big enough target is putting a bounty on their own head.
Yeah.
Let's do an episode on assassination.
No, but so as you were saying, that's kind of how the Wild West was. The difference is that this will be a global market instead of just like, oh, there's a bounty on this person's head, reward $500 or something like that, dead or alive or something like that, and just post it, in some bars, in some saloons, this in
much more efficient
on the internet. Yeah, it's the whole world can see it.
It's at scale. It's much more efficient. It's global. Tons of people can contribute money to it, and the big thing is that it's anonymous or can be anonymous. Because if you're placing up a bounty on somebody's head, if you're saying you're going to reward, like you have to be able to be traced in order to give the reward to the person who.
Well, the way that it will work is like
the person has to be able to prove that they were the one who actually killed.
Right.
The person.
I'm saying is in the Wild West scenario, like anybody who wanted to put out a bounty on somebody's head, it had to be known who they were. The difference with crypto assassination markets is
you can be an anonymous bounty person.
Right, and there can be millions of people contributing to the bounty.
Mm-hmm. That's true. Yeah, you can crowdfund it. Yeah.
Yeah, and then what needs to happen is just whoever wants to claim the bounty needs to somehow prove that they did it through, I don't know, maybe they can upload video evidence or something horrific like that. I don't want to.
Yeah.
It's almost like
Well,
in 100 years, if these markets exist, you're gonna have to just be like constantly watching your back, so that like
you just have to
create
not
enemies.
You just have to not make a bunch of enemies. Yeah,
you have to ward off the evil eye,
yourself a
basically.
target.
Well, which is similar to today. You also just have to not make a bunch of enemies. It's just that your enemies could coordinate in a way that they couldn't.
Yeah, or like if you have a particularly rich enemy, that might be a problem.
Right.
But I guess it's like that today too. So
Right.
Yeah. One of the scary things about the crypto to me is that, like, a lot of things that people want to do anonymously are good, and a lot of things that governments do to control money are really bad. Like, they keep people locked into markets where they're at an inherent disadvantage because of where they were born and what currency they're allowed to use and stuff like that. And it's great that crypto can liberate people from that, but crypto also enables shady shit to coordinate in a way that it never could before.
I don't know.
yes, and my answer to that would be that it allows the good money to also coordinate against the shady shit.
Yeah.
In equally as powerful of a way.
I mean, the internet allows.
Like an atomic bomb or something.
Yeah.
Well, or just hacktivism. Like you could fund, like a hacking group. Because this is what you're going to want. You're going to want to be able. You're going to want, if somebody does something bad, you're going to want to be able to track them down and punish them. And so the best way to do this is going to be, like hackers kind of finding out ways to surveil people and all that. And so if there's a hacker group that proves that it did something good, that they're basically white hat hackers, that they're good guys, then those guys might get a lot of funding, to take down the bad guys. So that's what you'll want. You'll want good guys to take down the bad guys.
Yeah. To a certain extent, like, good guys already can coordinate on a mass scale. Some things that are good are illegal now, so they can't coordinate above ground, but what this enables is things to coordinate underground anonymously on a massive scale. And that's good and bad, but I feel like it will actually... I feel like there's a bias of anonymous things towards being bad, because, like, if you're bad, you don't want anybody to know what you're doing.
Well, yes, I agree that the anonymous things will be, or let's say the anonymous markets or the black markets will have a higher percentage of bad people than the white markets. That's definitely true.
You think it's definitely true? I think.
Yeah.
I think it depends on where you are and what you're doing. And again, in America, right? Because this is all very much from the context of like, you're American, I speak and kind of breathe American culture. Like, yeah, okay, sure. Because most things that are good are reasonably legal in the United States. You could argue that the drug market and selling weed and stuff like that has been liberated to some degree by Bitcoin and cryptocurrencies because of the underground drug markets that are focused specifically on selling illegal drugs that are recreational, and there's no victim, no crime, so to speak. Whereas in countries where one of the classic defenses of anonymity comes from the journalistic sort of tradition, which is if you want to be able to reveal the secrets of the powerful and maintain your security, right? In order to be able to be brave enough to do it. And so very few people will take that freedom and actually use it to reveal the secrets of the powerful in order to reduce their power, but also to reveal the powers of the evil as well, right? So it can be used as a tool for good. Bitcoin is a technology. All technologies are neutral. And so at the end of the day, it's up to sort of what people decide to do with it. But it reestablishes freedoms that have been to some degree lost. And that's the freedom of, what are you going to do with your money? Are you going to support? Like, what can you politically support and what can you not politically support? Who you can speak to, who you can do business with. I think, freedom is a scary thing.
Yeah. Journalism is a great example. Like, in the U.S., you can be pretty free journalistically, but in other countries, like, let's say, Turkey is a good example. I visited there recently. Like, they have tons of journalists in prison. It's very dangerous to be a journalist. Same in Mexico. It's extremely dangerous to be a journalist for different reasons. Something like crypto could enable funding of a journalistic outlet and, like, allow journalists to make a living while remaining anonymous.
Well, we have a non-hypothetical example. WikiLeaks was kept afloat by Bitcoin.
That is true.
In 2010 or so, WikiLeaks was in the middle of revealing political secrets and political corruption, and then a consensus of financial like financial cohort gave Visa, MasterCard, and PayPal, and all the institutions, like they boycotted WikiLeaks, which is a hack, right? Because there wasn't any government attack on WikiLeaks specifically. It was like political pressure was put on these companies to boycott WikiLeaks, and then they started accepting Bitcoin, and then people started donating to them out of their political will. That people were able to fund an organization that was doing great journalism, despite the powers that be, and that led to good, right? And that, so we have a clear example, and they have a ton of Bitcoin now. Even though Assange is, in the shitter right now, I don't know what the hell is going on with Assange these days.
Did he ever get extradited to the U.S.?
He's probably in the process of, fighting that or whatever.
Yeah.
He got caught by the London police and stuff, and he got it, yeah. So
it looks like he's in a bad situation.
He's in a bad place, but they didn't manage to stop him for a long time, and he revealed a lot of bad things the governments were doing, and that example will, exists now and will probably continue, right? Somebody else will continue that legacy probably if he was taken down, right? So
I mean, WikiLeaks is a whole organization.
It's a whole organization, yeah.
Yeah, I mean, it was mostly him for a while.
Yeah,
and then a bunch of people joined forces with him, and now it's all these kind of
a lot of anonymous people, right?
Yeah.
Mm-hmm.
So I don't know. I mean, I think assassination markets are a very scary sort of thing to think about, even to talk about, right? And I think I don't know. I've never sort of consumed any content by Jim Bell, but it's good that somebody's thinking about it because and talking about it publicly, because that at least lets everybody else sort of
lets us plan
assume the information. Yeah.
What's going to happen when somebody does release this thing?
Yeah. Whether it's a net good or net evil, I don't know. I think these are the kind of problems that require a lot of time and a lot of brain power by many different people from different perspectives to reach a kind of consensus, and that'll form into whatever it is. I think hopefully if we're looking at it. I think not looking at it would be dangerous, because then it might grow on its own and then hit really hard. But I think we'll probably be fine.
So I'm gonna change the topic. Do you guys do you have any final thoughts on crowdfunding and assassination markets? And actually, can we talk about positive? Actually,
So
like charity organizations.
Yeah. So
I guess we already kind of did talk about that a little bit. But basically, if there's a natural disaster, Bitcoin liberates money. It allows people to just donate to fix some natural disaster or to further some cause. And so
that's definitely already, you're definitely already able to do that with other forms of money.
Sure. Kind of. You have to be hooked into the financial system.
And then you have to trust the charity, which is another thing. Something you can do with Bitcoin that actually is being done with Ethereum by an organization called gosh, I won't have to give you guys the name later, but I actually interviewed them on my channel, and they go to Burning Man, and they're kind of burner types, right? And it's a smart contract sort of structure that lets you see the flow of money in a charity.
Oh, are you talking about BitGive and Connie Lippy? They made a product called GiveTrack, where you donate some money and then you can just track it on the blockchain to see where it went.
Yeah, so that's one of the areas that blockchains and cryptocurrencies and Bitcoin allow, is you can actually make something explicitly publicly visible.
Yeah, and so radical transparency.
And so you can see charities, you can show where the money is going in a charity, which is something that I think is one of the main areas of resistance in charitable donations, is you just give money to this organization and instead of and so you can donate directly to the victims, right? So in many cases, people will just put a QR code on TV in the middle of a CNN report or whatever, and then a ton of Bitcoin will just fall on that person because it can, and so it eliminates resistance to the flow.
Yeah, that's another thing that you can't do with the traditional banking system.
Yeah. I mean, they could just put a picture of their PayPal, but then PayPal is just breaking down, right? Right now, for example, in Mexico, there's some big regulations, some new stuff happening with PayPal that I don't really understand this. I'm not going to get into it, but it's not good. That's what I'm hearing, right? So,
were they trying to shut down PayPal? Or?
You have to you can't have a PayPal inside of balance inside of PayPal in Mexico. The balance is going to be inside of your bank. PayPal is just going to be sort of a means to an end, like a sort of bridge. Mm-hmm. I guess is my rough understanding of it. and so you basically have to be plugged into the banking system anyway, which is like.
Yeah, that's a huge thing that cryptocurrency can do that we haven't talked about much is banking the unbanked. Like the vast majority of the world is not plugged into the banking system at all.
Yeah, no, this is one of Andreas's main points that he likes to bring up is that there's 6.5 billion people who are underbanked. There's about 1 billion people who have like full access to the banking system, and then there's the other 6.5 billion people have kind of not all of the services that they need. And so Bitcoin and cryptocurrency in general, like on-chain transactions are going to be pretty expensive probably moving forward, but off-chain transactions, Lightning Network, and altcoins are going to be cheap forever, and anybody can, you don't need to prove your identity to spend money on these networks. And so you can just be some random farmer from some poor country, and you can be sending money across the world no problem, in a few minutes. I mean, if you look at the success of M-Pesa in Kenya, just having a payment system that is functional is huge for economic growth. I think Kenya was already doing pretty well, but now it's like booming. So I want to get to the robot uprising too.
Right.
But let's keep any more thoughts on. Let's keep talking about.
Yeah, I mean, I think that there's
banking the unbanked and all of the cool things that can happen with it.
Well, I mean, okay, we can talk about banking the unbanked. I think it definitely liberates people to have access to a global economy where they can raise money and start businesses where locally for them is obviously a life changer, whereas for people all over the world who maybe have a lot more wealth or in wealthier countries, it can be very small sort of contribution, and so that asymmetry is very good for balancing out and leveling out wealth distribution, or at least opportunity distribution throughout society. Right, somebody that's born in the United States has access to capital markets and investment markets that most of the world doesn't have access to. They have access to credit systems that are very deep, right? And so you can actually just get a credit card just because you're a human being, and then you get a credit card. And so now you have $3,000 in a piece of paper, a piece of plastic that most of the world is months of living, right, expenses. And so that access to credit is actually a huge opportunity, and that can be spread more as the technology continues to scale. I think we'll see where the limits of that are, and I think it's still early. I mean, the reality is we're still 10 years away from that kind of proliferation of technology,
where you can do like loans on the blockchain.
And just reach that kind of scale, right? Like the next wave of adoption will sort of price out some of those people with the fees, right?
Yeah.
I think that's already happened to some degree in Latin America, but it's possible, right? And it's possible in a way that hasn't been possible before. So that's,
yeah, definitely.
Yeah.
And I do think that the Lightning Network is kind of like the decentralized banking layer on top of Bitcoin, and the decentralized payments layer on top of Bitcoin. And I think, along with banking, it are all the functions that you can expect from a bank. So loans would be one of those things, credit and all that. So potentially you could have decentralized finance.
I think a more realistic and much more interesting future for Bitcoin is that the way that the banking system works is unsustainable, and it's unsustainable in the sense that it depends on biometric data, which is something that I brought up a few times, and data about your name, your date of birth, your place of birth, your citizenship, all these information pieces are fundamental to access to financial services in the legacy sort of banking system. But just the equity hacks, like the hacks that have happened in the past 10 years are eroding that structure. So Equifax got hacked, I think a year ago. Equifax, basically, might as well call it Equifax.
Great nickname there.
Thanks, sir. Totally on purpose. There was about 150 million people that lost critical records during that hack. And that information is floating in dark markets right now, and is being used to erode, to cause a kind of crime called identity theft, where somebody can grab those pieces of information, and then if they find somebody that looks enough like you, they can have that person go to a bank and open an account on your behalf, get credit on your behalf, commit tax crimes on your behalf, and open up corporations and basically impersonate you. And the problem with that kind of data system is that you can't change your password because you can't change your face and you can't change your date of birth and you can't change a lot of this. It's very hard to change your name, or at least there's enough resistance to changing your name. So the way that we control digital wealth today is fundamentally broken. It's a very, very low quality information system.
Right.
And identity theft is one of the most expensive crimes in the United States today. I think in 2014 statistics were like, it was $28 billion in 2014, whereas all other crimes combined were $14 billion. So it was twice as much as every other crime as far as the net costs. And the only reason we don't really feel those costs is because the banking system has all kinds of sort of layers of insurance and risk management. And so they basically use the inflation powers and their fractional reserve powers in order to ease the friction that this kind of fraud creates. But that's just sucking the trust out of the system in a sense. It's sort of it's
well, but I think it contributes to this kind of general malaise that we're feeling now. You can kind of feel like your life is being sucked away, but it doesn't really.
But you don't know how.
You don't know how exactly. Yeah. It's just kind of generally.
Yeah.
So I have a question. Do you think it's more likely that we're going to solve this identity theft issue by decoupling physical identity from your money holdings, or do you think it's more likely that in the mainstream we're going to have much harder, more secure identity checks like biometric, like chips,
there's
implants,
a CEO,
like eye scanners, like things like that? I'm hopeful for Bitcoin. That's what I want, but I actually see it much more likely that we're going to start like really.
I think biometric data is doomed. Like biometric authentication to banking system is already a thing. Like even in Mexico, the bank will ask you to voice a message, this is my bank and la 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 la, and it'll grab your voice and use that to authenticate you against the database, and then it'll allow you in.
Yeah, I have biometric authentication to get into my apartment building.
There are deep fakes.
Yeah, deep fakes, AI-based fake voices and facial expressions are already like proliferating. Like a CEO just got hacked through a deep fake of his voice, right? And got access to bank accounts and money was stolen. Like a high status guy, right? A public guy got deep faked and her biometric
biometric data seems like a really, really bad
It's
way
a
to do
very,
security.
very shaky structure.
Chips or something like that?
I mean, chips are
equivalent to information in your head. One is information on a chip, the other is information in your head.
Yeah.
So like passwords.
Also, there's going to be a massive religious resistance to getting a chip. I'm certainly not going to put a chip anywhere near my family or me. So, I'd rather have a card that I can throw and replace, right? And then you put a chip on here, and then the underlying protocol gets hacked. Like the SIM card protocols are being hacked recently, and then you gotta do surgery to get it out. I mean, it's really bad.
It seems like the best way to do security is the way that Bitcoin does it, which is you have a piece of information that you keep secret.
Yeah.
And that way, if you're, maybe you have a horrible face injury or something like that, that way you still have your money, even though your biometric data has been altered or somebody has managed to replicate it or something.
Yeah.
Do you think that's the best way to do security for most people?
I think it is.
I think it has to be.
Yeah, I think it kind of has to be.
Yeah. I mean, all right. So it's either that or you trust somebody else to do your security for you.
Yeah, I mean, I think most people are gonna always want to trust somebody else.
I mean, those institutions will continue to exist.
At least for the near future, you're probably right.
Yeah.
But I think I'm hopeful that we'll be able to retrain society and teach kids from a young age how to do security.
Yeah.
And have them be like digital natives. I think kids these days are very comfortable with this sort of thing.
Yeah.
Even not just the elite. I think it's like generally kids are comfortable with having passwords and all that. So
there's a multi-generational sort of aspect to this, right? So technological literacy will play a big role in it, and kids today that are raised around the internet and comfortable with coins and tokens and passwords and password management and so on, this will be natural to them.
Yeah, I mean, it's actually really easy stuff, and it's you just have to get some experience doing it.
Yeah.
And if you're raised from a young age to understand how to do it, then it should be no big deal. It's just that we have kind of older people right now who when they were born, like computers were just a twinkle in somebody's eye. Like literally computers were not around when they were born. When I was 5, my family got our first computer, and so I got comfortable with using computers. And so I'm much more comfortable even than my parents' generation with just how computers work. And so when you have that layer of comfort, that level of comfort from just being around the technology all the time, then things like passwords and information security and kind of digital hygiene, as it were, are not as scary to you. Like you still have to learn it and you still have to learn best practices, but you're comfortable with kind of the general idea of computers.
Yeah, and people are comfortable with computers, people are comfortable with passwords, but they're comfortable with passwords because there's password recovery. But there's no Bitcoin recovery.
So
there's password recovery if you have a recovery email.
Right.
If you get your email hacked, you might not have password recovery.
Right.
Yeah.
So you still have to take care of that password.
Yeah.
And that 2FA, hopefully.
Yeah, you have to protect an email, which is not arbitrary. It's not trivial.
Like if you lose your Gmail is not going to be like, oh yeah, we're giving it back to you. It's just gone.
Yeah.
Yeah, that's not so high stakes.
Well, it is.
It is high stakes if you have all of your other passwords protected.
If all
by
your banking
email.
accounts are depending on your Gmail, then you
Your
basically have
banking
to
accounts,
go.
At the end of the day, though, your banking accounts don't depend on your Gmail. They depend on you going into
Well, people can
your banking account
drain money out of them, right? And so now the banking system will protect you from a fraud risk management perspective, but then they'll put you on like quarantine mode, and then.
But they still are using biometric data.
Yeah.
By that I mean like. You have to physically walk into the bank, and basically they can verify that it's you.
And banks have, they have a lot of interest in being careful with this. One of the biggest types of hacks that has happened in the recent years is something called SIM card hacking, where you have a phone and you have a SIM card, and that SIM card has information about your phone number, and then you log in, you get invited to some group on WhatsApp, and then so all your phone number and your name are in it, and so an attacker will be like, okay, great, I have their phone number. Now all you have to do is get your primary email, and if you're using your primary email for your website or other things, then they get somehow, or they ask you for your email to send you something, or you somehow, and there's many ways that people can get your email. It'd be a little bit more difficult than what I just mentioned with the phone, but then what they can do is they can call up AT&T, right? And then impersonate you, and then take over your phone number, right? And have their phone number forwarded to their phone number. And part of the way that they do this sometimes, and there's like organized crime sort of groups that have sort of risen to exploit this, is they'll send somebody to a branch that looks like you. They'll create a fake ID around you because your face is on Facebook, right? And it's public all over the place, right? Especially around more public targets, but this has happened even to low, sort of like not that public people. And they'll impersonate you, take control of your phone number, and then now they'll use that phone number to change your password to your very useful Gmail recovery process, take over your Gmail, and once they take over your Gmail or your email account, they basically own you because they can start recovering bank accounts to some degree. They can take over probably PayPal. They can certainly take over cryptocurrency exchanges. They can take over your Facebook account. And then once they impersonate you inside of Facebook, they can start scamming your friends, especially during crypto, like, oh, hot opportunity, or, oh, I'm stuck in the Bahamas, I don't have any money, wire some PayPal to me, right? And those scams are happening more and more, and they're happening all the time to the tunes of millions of dollars. And I haven't been able to find an academic study or a credible study that puts together the numbers, but it's easily in the hundreds of millions of dollars. And that is a failure in the way that we authenticate individuals to the internet. And Bitcoin, if you have your own wallet and if you have a backup of your wallet, you're immune to that. And that's, I think, one of the most exciting things to me about Bitcoin is it changes the way we interact with online services, and we authenticate ourselves to them.
Yeah, one of the things another thing that Andreas likes to talk about is how basically, so there's two related things. Basically, that the original financial network, the legacy finance system, is what he calls a smart network, and Bitcoin is a dumb network, like the internet. And what that means is that the intelligence is actually at the edges in a dumb network. It's actually in the devices that are using the network, and not in the network itself. Bitcoin is this dumb transaction processing network. You use whatever smart technology in order to build the transaction, and then you send it to the Bitcoin network. The Bitcoin network goes, oh, looks good, or oh, that's not good, and it either yes or no. The phone system was a smart network because the devices using the phone network were just these. It was like 4 switches, and it couldn't do that many things. Eventually, they built in like number dialing and all that, and like caller ID. But every time they had to, basically, so it's centralized. A smart network has to be centralized, and so anytime that anytime there needs to be an upgrade on the network, it basically inconveniences everybody on the network. Whereas with a dumb network, where all the intelligence is pushed to the edge of the network, whenever you need to upgrade the network, you can just upgrade how you're using the network, and you can just start using it in the new way. And as long as other people are using it in the new way, the people who are still using it in the old way are not affected.
Yeah, you can think of 2 things. You can think of the individuals participating in the network, and then you can think about the rules and the processes of the network itself. And so Bitcoin as a protocol is a very simple protocol. It just determines whether a transaction is valid or not, and then broadcasts it, right? And then people at the edges, the individuals at the individual level, they can make complex decisions about who to send what, when, and whether a transfer is valid, and whether they're being scammed or it's an authentic trade, and so on. So that the individual gets to make that choice and sort of compute that. Whereas in the banking system, or other corporate systems, right, there's a huge amount of brain power at the network level, and then individuals are sort of reduced in their freedom and their possibilities to engage in trade. So in a sense, right now there's a lot of politics around, for example, Visa, right? This politician, Beto O'Rourke, is trying to get Visa to boycott AR sort of rifle sales dealers, right? And Visa could do that. Whether they will or whether it's economically feasible for them is certainly questionable, but they could do that.
Yeah.
And that's what a smart system is. They can. You don't have that ability, right?
Right. And so exactly. And so as you just pointed out, basically what that ends up doing is that on a dumb network like Bitcoin, all of the security also gets pushed to the edge. So you get a lot of freedom in how you can use the network, because the network isn't going to check who you are, check your identity, be like, is this transaction okay for you to send? It's just going to send it. If you paid the fee, it's going to send it.
Yeah.
And so you have to do all of the, you have all of the responsibility to make sure that nobody is impersonating you on the network, nobody's using your funds. So all the security gets pushed to the edge of the network as well. So the quintessential example of the difference between the security of Bitcoin versus the security of the legacy financial system is credit cards. So with credit cards, especially the ones that have the magnetic stripe. Basically, the magnetic stripe has your credit card number, your name, the expiration date, and the CCV2 code. And it's just got that in the magnetic strip, and it just sends that over the network to whoever the merchant is. Yeah. And that goes to all of these different intermediaries, and it goes to the merchant, and it goes to everybody. And it's basically the private key to your account. Yeah. It's basically the information that is necessary in order to spend your money. And so you have to trust everybody that's along that chain. And so the banking system relies on carefully vetting all of the people who are participating in the network. And so there's this kind of walled garden around the financial system. Whereas with Bitcoin, you sign the transaction, you broadcast it to everybody, and there's nothing that anybody can do with that transaction except put it into a block, and the money that you already said that you wanted to spend gets spent. That's the only thing that can happen with the transaction.
And it can only be spent to the
recipient that it says in the message. It specifies in the message, it says, I'm spending this amount of money from this address to this other address. And then you sign it using your cryptographic keys. And then so basically, because the signature, you cannot derive somebody's private key from a signature. Yeah. But of course you can calculate a signature from a private key, which is why it's useful.
Quick important note, that's called asymmetric cryptography.
Yeah.
And you want to look that up.
Yeah, asymmetric cryptography, exactly. Yeah, so as I was saying, with a Bitcoin transaction, you can broadcast it to the whole world, and nobody can actually use that to spend more of your money. Yeah. So while there's more responsibility with using Bitcoin, there's actually way more security. And so this problem that you were talking about before, where places like Equifax and all that getting hacked, with Bitcoin that doesn't matter unless you have your private keys on their server. So if you're storing your money with Coinbase and they get hacked, then your money's gone. Yeah. Or on an exchange and your money gets hacked, then your money's gone. Mm-hmm. But if it's on your Trezor or in your in your head or on a wallet where you control the private keys, then the money is yours.
Yeah.
And as long as you don't show that password to anybody, show that private key to anybody or lose it, then you're fine.
Yeah. And I think that aspect of Bitcoin's sort of security model and authentication model is going to continue to grow and get easier, right? So there's two things that came out recently that are really, really cool. Well, three. One of them is called the Shamir secret sharing or the Shamir implementation by Trezor, which again is like you grab this master seed. This is the most complicated
which is a password split, a private key splitting scheme that's been around for
it's been around forever,
a couple decades.
Yeah, for a long time. So they just implemented it in Trezor and try to standardize it so that people won't make technical, minute mistakes in its use. It'll just use this model, this template, and this template will work. And that's really great because the most complicated thing you'll do with Bitcoin is you'll buy a wallet, you'll write 24 words, and then you'll put those 24 words away, and then you'll send money to it. And the responsibility that you have is to make sure that if you lose either your wallet, if you lose your wallet, you have to go immediately and restore your money into a new wallet. If you lose the backup, you have to grab that wallet and send it to a new wallet, generate a new backup immediately, or generate a new wallet with a fresh backup immediately. You have to do that. That's your responsibility, right? You have to do that.
Yeah.
I think that'll get even easier.
Yeah,
right?
and it's not hard. It's
not
just
hard.
You have to know
it's just
to
new.
do it. Yeah.
It's just new.
And you have to know how to do it. Which
Yeah. I mean,
it's hard to screw up.
With Bitcoin, there's a great deal of standardization with the way that wallets work, and wallets generally understand each other. I think with the altcoins, that's a lot more difficult and complex, and there's less interoperability between wallets. I think with Bitcoin Cash or Bcash, there's been a lot of weird bugs and errors in that, and so that's one of the reasons Bitcoin is good too, is because they've been very careful in its development and professional grade engineer, like top notch grade engineering. Whereas with a lot of the altcoins, that's not really quite the same. Yeah, so that there's a lot of exciting stuff there. So the other thing that happened is multi-signature technologies, where you have a private key in a wallet, I have a wallet, and you have a wallet, and then between the three of us today, right now, we could create a 2 of 3 multi-sig contract, or a Bitcoin smart contract, which is really a dumb contract, because again, Bitcoin is dumb. It's a dumb protocol, right? But socially speaking, we could make a wallet, an account of Bitcoin that will only be capable of moving money if 2 out of the 3 of us can sign the transaction, and then that money will go out. And so that creates a stable sort of relationship where none of us have sole control over the finances, right? So that's valuable from a fraud prevention in a company, for example, right? It sort of distributes it, it creates a kind of control, like it takes away power. That's what Bitcoin fundamentally does. It removes power from centralized sources. It allows you to remove power from.
Well, it also allows you to empower people to do more things than they otherwise could. It allows you to encode power in a much more efficient way, such that it goes to where it needs to go.
Yeah, it changes power distribution.
A lot of what I was thinking when you were talking about the dumb network and how everything happens at the ends and how people need to be responsible for their own keys, but how you can use the network in many different ways, because like what's happening is all happening at the ends, which can be changed, and you don't have to go in and change the whole system. It's kind of a libertarian ethos in and of itself. It's freedom, individual responsibility.
Right. Yeah, and I think there's kind of 2 models that do this opponent processing. It's kind of like yin and yang, where one of them is bottom up, like the libertarian version, like you said, the kind of every innovation at the edges. And then there's the kind of centralized version, which is the kind of government fiat, banking system version. And I think that neither one of them is going to completely go away. And I think that in recent years, we've just had an imbalance where there's been too much centralized control. And I think what I'm excited about with Bitcoin is that Bitcoin restores balance. It kind of gives more power to the decentralization side, and allows individuals to be freer than they have been for a while. I do think that there will always be kind of centralized walled gardens of control, but as long as they're built on this substrate of sound money and freedom, I think we'll be okay as a world.
Yeah, there's a lot of parallels between Bitcoin and the birth of America. the American Constitution, First Amendment is free speech, and Bitcoin is information fundamentally that is unstoppable. So it is free, and it's distributed, so you can transmit information, via SMS. You can receive it via satellite. It's practically free and by design free, and rebellious by nature, and so it will continue to be free. Very, very likely continue to be free. It resists capture, and so the First Amendment is basically built into Bitcoin in that sense. The Second Amendment, which would be sort of gun rights and the right to bear arms, is, you could argue, is the ability to control your own money fundamentally through a password. And so there's no one that can dictate to you what your property is. As long as you can protect your property in Bitcoin, it is your property and you have full freedom to use it. And your ability to protect it is your ability to keep a secret safe. And so humans are great at keeping secrets in general. Like I said, these are new kinds of secrets, right? But people are like honesty is a revolutionary thing in the world. Lying is and white lying is generally and deceit through obscurity or through refusing to communicate certain information is the norm, right? Can you imagine what would happen if people were constantly speaking everything that came through their minds, right? If you had 100% honesty, society would crumble. Not because the world is made of lies necessarily, but because the truth requires context and aim to be effective. And so people, if you want to communicate a complex truth, you need to take a moment like this podcast and talk about it in depth with focus, right? And by taking that purpose, we are not talking about a million other things. And that omission is a kind of sort of secret in a sense, right? I know that I just sort of painted a very complex picture there, sort of broad strokes, but I think people will, there's power in our ability to imagine something and not communicate it. And okay, so you can sort of draw a parallel to the Second Amendment there. America was also sort of founded by...
Wait, I'm sorry. How is there a parallel to the Second Amendment?
In that the power, and that there's individual power to protect your own property claims, right? So with the Second Amendment in the United States is...
So kind of like your thoughts being your property, and you have the ability to protect them.
And you have the ability to hide the secret, which protects your ownership over the Bitcoin. In America, you have the right to bear arms, so you can own a gun to physically protect your property.
I see. So what you're saying is that the right to privacy is almost kind of like the right to personal property. It's like I have the ability to own myself, and as a prerequisite to that, I need to be able to have certain things be secret.
I would say it goes beyond a right, because a right is sort of like this legal privilege. I would say within the Constitution, you have a sort of moral standard of anybody can wield the weapon to defend themselves, right? And that is an ability rather than a right. That is a power rather than a moral sort of privilege, right? And the same. Well, I mean, we can argue about that, but
but the thing is, like, we don't actually have individuals in the U.S. don't actually have that power to bear arms. The U.S. government could use its power to confiscate weapons.
No,
it is a right.
They couldn't. No, it would be a civil war that would destroy society. And the vast majority of
if the government
did
a Beto O'Rourke and it was just like, we're coming for your AR-15s,
well, it'd be a civil war.
It would be a war.
It would be a war, and it would destroy the society. So
yeah, it would be a losing battle for the government.
Yeah, it would be a nasty war. There'd be a lot of blood on the streets, but it would not like that's why America has never been invaded, because there's a gun behind every blade of glass, as the Chinese president at some point said, or dictator or whatever, right?
So I think a good way to put what you were saying before about the parallel between the Second Amendment and privacy, or secrecy even, is just thinking about Bitcoin. I mean, so your Bitcoin private key is a secret that if you tell it to other people, then they get your wealth, basically.
Yeah.
And so, and Edward Snowden talks about this. Like people will often say, "Oh, well, but I have nothing to hide," and it's like, well, yes, you do.
Yeah.
Do you just leave your curtains open all the time?
Yeah.
And do you just tell people your passwords? Do you just let
Yeah, fun fact.
Like you have things about you, information about you that you keep secret.
Yeah. Mm-hmm. Yeah, there's this very, very insidious.
And that's necessary for sovereignty.
To
own yourself.
you don't owe anybody honesty. You can be honest with yourself, and I think that's a great virtue. Maybe the first virtue is honesty with yourself, but you don't owe anybody honesty unless you enter some sort of relationship.
No, I
with
think
them.
honesty is good. I think telling people your secrets is different from honesty. Telling people all of your secrets is different from
You can
honesty.
be-
If somebody
you can be
says,
honest
"Hey,
and say, I
Juan,
don't wanna share
what's your
that."
Bitcoin
Sure.
private key?" You can just be like, "I'm not going to tell you."
Yeah,
and that's
yeah.
not being honest. That's not
Right.
being dishonest.
That's being honest.
That's
about-
being honest.
yeah. Sure.
You're just not divulging all of your.
Sure.
your
I mean, I'm
deepest,
using the
darkest
word
secrets.
honesty in the sense of communicating the truth about it. I think, right? So yeah. So
I think, for the record, I think honesty is great, and I think everybody should practice it more.
yeah. But I think a world where like you could make a parallel between overwhelming surveillance and a world where people don't have a choice about their honesty, right? So you're not willingly being honest. You just have no power in what you communicate, right? Like imagine a dystopian world where there's cameras in every room and your phone is always listening, which maybe they are, probably they are, and you walk out of the street and there's CCTV cameras and everything is recorded. You no longer have this freedom and this choice about whether or not you communicate what you want to do and what you're doing in your life to whoever is listening, right? And
I think we need to decouple honesty and dishonesty from privacy. I think that's a lot of the reason why people are opposed to privacy is because they associate wanting to be private with wanting to be dishonest.
Dishonest, yeah.
But there's
Yeah.
also, like the example that you just brought up, it's not necessarily that I want to lie about what I'm doing in my house. It's that I don't want to be observed. Like when I go to the bathroom, the reason why I want that to be private isn't because I want to be dishonest.
yeah, you're not lying to people to
Yeah.
deceive, to defraud them or steal from them. It's not aimed at anybody. It's a protective, it's a defensive mechanism. If somebody comes at you with a gun and says, tell me where your money is, you don't owe them honesty. You can morally tell them,
Hang on.
money.
I think you're using the wrong word there. Honesty is not the word.
I'm routing
Well,
around
if
it.
somebody's saying that, then it comes to honesty.
Yeah, it does come to honesty.
Lie.
You can lie to bad people. It's okay. It's morally justifiable. And
Sure, I guess if
and-
somebody's threatening with
Yeah.
your gun and they'll kill you unless you say
Sure.
something,
Sure.
Yeah.
then you should lie. Yeah.
That's a
Sure.
lot of what privacy is about too. I guess that's where it
Yeah.
is connected. Is it doesn't allow you.
Yeah.
If you lose privacy, you no longer have the power to lie in order to defend yourself.
Yeah, and you don't get to be you get to be the judge about the moral integrity of the person that's requesting data from you, right? Because who judges who's good or bad, right? That question is not an easy question. It's a very complex question. So why, having the ability to refuse to participate in somebody else's claim over your property is valuable, and it's a protective mechanism. So privacy and your choice to communicate information, like truthful information to people, is very, very important. And there's a very insidious meme that you actually just communicated, which is that I have nothing to hide. If you have nothing to fear, you have nothing to hide, right?
If you have nothing to hide, you have nothing.
If you have nothing to hide, nothing to fear, right? And that's a meme to try to get people to just give in to mass surveillance. And it actually came from the Nazis, from the propaganda minister of the Nazis, which implemented the most sophisticated surveillance system at the time, and then became, obviously, the Nazis, right? And so, it was arguably one of the pillars of control that the Nazis had. And so, I think that meme is questionable, but unfortunately it's very insidious in society, and privacy is very complicated in today's world. But nonetheless, one of the great branches of innovation that Bitcoin has brought to the world, and that is not really understood by the public, but which will have very clear and significant, meaningful effects in their lives, is the ability to control and keep a secret. And by secret, I mostly just mean a password, right? Like to keep a password secret from the mass surveillance.
Yeah, and a lot of times it's the seed, not the password. And the problem with this is that it's
I'm using
it's
the words.
very long, and you probably can't memorize it.
I'm using the
but
words
if you could
interchangeably.
memorize it, maybe you should.
Yeah. So I'm using the word seed and passphrase interchangeably, but really you mean a master seed is what it'll be called usually, and it's 18 to 24 words. And with Shamir, you can now make them like 8. You can hold 8 or 10 that are redundant, and then put 10 with your attorney, and then put 10 with a trusted relative, or bury 10 in some hide 10 somewhere and then carry the other 10 with you, and then 2 out of 3 will let you restore control over your money. So
yeah, so let's zoom out from the technology and just, I think that Bitcoin is going to change a lot of stuff about how our society is shaped, and that's why I think I'm trying to keep my pulse on everything that's happening in Bitcoin. I think it's going to cause a lot of rapid change once it goes global and people really start using it, and a lot of people are going to get hurt if they're not prepared. And I want to educate people so that the impact is as minimal as possible. But I think that this phenomenon that we've unleashed with cryptocurrency is, there's a certain aspect of it which is just unstoppable. It's just inevitable. And there may be some good things, there may be some bad things that come out of it.
There will be winners and losers.
There will be winners and losers with everything, as with everything. But I like to stay optimistic and just say I do think that the world at the other end of the transition will be better than the world that we're in now.
Yeah.
Then if you don't think that, then you're kind of fighting it. And then if you're fighting it, then you're going to lose.
Yeah.
Who do you think are the main people that stand to lose?
People that don't pay attention and people that don't pay attention to it. So let me
poor people in welfare states.
I mean, if you're in the welfare state and you choose to spend your time to improve your mental state, your psychology, and then your human capital, and learn to code, you could be a millionaire in 5 years, right?
Yeah, but you're on welfare right now.
So what? So somebody else is paying your rent. You could use that as a conscious individual. You could use that money to.
Yeah, I mean,
to buy
hopefully
Bitcoin
we can find these people and get through them and get them to
they
learn
exist.
this stuff.
I can guarantee
but they don't appreciate being told that they should learn how to code.
Sure. I mean, I've met people like...
Learn to code was literally a banned phrase on Twitter.
Yeah. I mean, it's true though. Like people should learn to code. Like, well, and this is the last thing I want to talk about is the robots are coming for your jobs. Like what Bitcoin enables a non-human entity to have a bank account, essentially. And when you have the ability of a business that runs itself, that's just a piece of code that has a bank account, then it's going to be able to do stuff for so cheap that you can't even believe it.
We haven't really talked about that a lot. Like one example that we brought up was Dash, which is basically a business that had its own bank account.
Yeah,
but you're talking about decentralized autonomous organizations, or
no? I'm talking about things like a self-driving Uber car.
Yeah.
This is an example that Andreas brings up in the book. That basically the car is this smart contract that's running on, I don't know, Ethereum or Bitcoin, or that happens. It's this self-driving car, and it has a certain amount of Bitcoin that it's been owned. Maybe some human person wrote the code for this smart contract
and invested in the car.
And then the person just died, right? But the thing is still running itself. And if it's intelligent enough, then it can make copies of itself.
It can hire people to repair it.
It can hire other cars to work for it. It can expand its business. Mm-hmm. It can hire people to repair it if it's got some bug that it wants fixed. Mm-hmm. Then it can hire a programmer. It can hire a human and pay a human to fix its code. This is all possible with Bitcoin, and it wasn't possible with the legacy financial system because you have to be a person to control a bank account in the legacy financial system. Yeah. And so Bitcoin doesn't care if you're a refrigerator. It doesn't care if you're a toaster. It doesn't care if you're a dog. It doesn't care if you're 5. That's another thing. Is kids are going to be starting businesses. Right.
Yeah, and if you try to hack the smart fridge, it might call the cops on you. Because you're trying to steal its Bitcoin. Yeah. That's reasonably possible.
And so Bitcoin enables autonomous agents. And this will kick off the process that will eventually create strong AI. Because what this will do is it will create this process of natural selection where the smart contracts that have inferior code will simply run out of money and stop operating. Right. And the smart contracts with superior code will survive and propagate and make copies of themselves.
It creates a very powerful game if you have strong AI maximizing for Bitcoin.
There's already a natural selection for AI.
So probably
I don't think you need money for that, but
what I'm guessing will
money
Well, no,
will-
you don't need money to program in like some kind of a mechanism that the AI is trying to shoot for. You don't need money for the AI to try to expand itself. But money does.
Yeah,
It gives it power to expand itself in much more.
Yeah, the more power it has, the more little copies of itself it can make, and each of them runs a business, and each of them is like a franchise, right?
Yeah.
Of its business, and it just takes a little profit off the top.
Well, I mean, think about this. Let's take the Uber example, right? I mean, somebody's gonna have to buy the car and install the thing, right?
Sure.
And then bootstrap it, and those initial costs could be the equivalent of an investment. You're investing in a sort of self-functioning robot that can protect itself and protect itself to some degree and fix itself to some degree by paying other people to fix it, and then produce passive revenue for people, right? So it's going to be a new type of business. I don't really believe that. I mean, you guys are deeper in this rabbit hole than I am, but I don't really. I think we're ways away from getting, I guess what you call strong AI, or sort of AI that's actually, competent like humans, cognitively speaking. I think that's we're.
I mean, it could be a few generations off, but I don't think it's like forever away.
I mean, human beings are incredibly complex machines, we're barely machines, but like very, very complex. And I think we are very naive about how complex we are. So anyway, it's theoretically possible, but I think we're probably ways away. We'll find out. Either way, it'll probably happen, and when it happens, it'll probably have a Bitcoin wallet. And we'll just deal with it like it's another animal, and we'll just shoot it with water guns and break it if it gets out of hand, right? But
I mean,
I think
eventually, maybe what's likely to happen is that the robots will end up with all of the Bitcoin.
Yeah.
And at that point, you'll have robots running Bitcoin land, and you'll have people running, Earth land. But if the robots get physical bodies, then that might be a problem.
Water guns, man. They're electromagnetic
I don't know
machines.
how to try to...
They're electromagnetic machines. We can figure it out.
I think they can figure out how to defend themselves against water guns.
Yeah, because an AI doesn't need to be...
Just put a moat over your shit.
Just because AI has a physical body...
It'll bring back boats.
Just because an AI has a physical body doesn't mean that the AI is located within a physical body.
Sure.
You can shoot down one branch of it, but it's already copied itself and distributed itself and
Yeah, but so you just isolate your network from them. In theory, you could potentially do that.
You just move to Mars or something.
Yeah. This is apocalyptic robot takeover scenario.
This is a little bit out of my field right now.
But I do think these things are possible in the future and kind of fun to think about.
So a fun scenario is AI living on the internet and not in physical bodies necessarily, but just living on servers and stuff will get strong just by virtue of information sort of evolution, so to speak, and then we'll figure out how to hack biology. And then find a way to create biological creatures, right? And it will enter basically Pokémon universe, right? Where you can grow a kidney or you can grow a piece of meat. You'll be able to grow a custom animal, like a tiny little monkey, that will have some sort of that the AI will be able to inhabit. And then you'll be able to feed it, and then you'll be able to buy them, and they'll have different consensus rules. And then
the kidney's going to have a Bitcoin wallet. And the monkey's going to have a Bitcoin wallet.
That's right. And we're going to have basically Pokemon. So it's going to be great. Great.
All right. Well.
There you have it, folks. By the way, I realized
Did you have something to add to that?
No, I think we're good there.
All right. So.
Well, let me end with one thought. So the last piece that I wanted to mention about the parallels between Bitcoin and America is that, and to answer your question about who will lose and who will win in this, America was very, very good to people that took the risk to go there and built dynasties out of this risk of this new land that was unexplored. Bitcoin is the new unexplored land. It is distributed cybernetic territory where we can build structures through cryptography, and those that dare enter this chaotic landscape and manage to establish, to create value and then establish positions, will be the ones that will benefit and will be the next sort of titans of industry, and they will fall on their own grace and rise on their own grace. And so I think that's an opportunity that everybody in the world pretty much has, more or less. Maybe not everybody because of access to opportunities, but certainly if you're listening to this podcast, you have it's early enough And the Bitcoin meme has spread quite widely. So, that's the best you can probably aim for.
But I want everybody to have as much information as possible. This is not the kind of thing where like you're going to gain by like keeping secrets to yourself.
No.
Like you want, the stronger each individual is, the more powerful the whole society will be. So we're moving into this space where there need to be strong individuals who are solid in their own knowledge of how things work. Yeah. We can't have people like this client server model of society, or hub and spoke model of society, where basically a large portion of the public depends on a very small portion of the public to do all of their thinking for them. That's not going to fly in the new world. So I'm trying to educate as many people as possible.
I think that the most beautiful thing about Bitcoin, I think, is that it incentivizes collective contribution to the society itself. So with Bitcoin, a legitimate business model, and that may be the case for the coming 20 years, is you start buying Bitcoin, and then as you accumulate a Bitcoin position, you use your free time to contribute to improve the system, maybe in an open source fashion, such that you're providing code that solves problems in the system, or you build businesses, or you try to solve problems. And holding the Bitcoin alone, as it continues to appreciate, as it's likely to continue to appreciate, will pay you for your contribution to the network. So you can contribute freely and generously to make this Bitcoin society better. And by holding a piece of the asset, you will be rewarded as those benefits materialize in market demand. Mm-hmm. And that's certainly new to my life. And it's something that I think is sort of, I don't know how new it is in society in general, but...
Well, you could draw an analogy of like contributing to your local community. Like, for example, if you own a piece of property and you contribute to making your neighborhood or your local community or your town better, your property is going to appreciate in value.
Sure.
So it's not completely new. But I think with Bitcoin, at least as it is right now, or at the very beginning, the potential for growth and like personal benefit was much greater. There's still a lot of room for growth in Bitcoin. Like if Bitcoin actually became popular on a global scale, I'm sure it's been calculated. Do you guys know, like, if half the world was using Bitcoin as money? Like,
I think it's $500,000, and it reaches the market capitalization of gold, which is one of the most ancient forms of store value and money. And then to become like the denominating asset in the stock markets, I think now we're talking in $5-10 million worldwide, like if you per Bitcoin.
And if it were so all of the dollars in circulation are like $100 trillion or something like that. All of the dollar denominated assets, I think, are like $100 trillion. And if you count derivatives, it's like a couple quadrillion.
Yeah, it's quadrillions.
Yeah. So Bitcoin would have to be, I think it's like 10 million per Bitcoin in order to hit that.
All right. Thanks everybody for watching.
Yeah, thank you for coming on, Juan. If people want more of you, how do they find you?
Juan Galt. Look up Juan space Galt. I'm on Twitter, Facebook, YouTube, everywhere. JuanGalt.com, my website. I have a bunch of content in there. And I'm teaching people how to protect their Bitcoin and how to protect their phones from fall and damage with a little gadget called the Phone Huddle. PhoneHuddle.com. PhoneHuddle.com.
Okay. All right. Thank you, audience. We hope that you, we hope you like this conversation, and we'll see you next time.
Bye.
Bye.
Thanks for joining us on the Multiversity Project. We hope you found this episode both mind-bending and enjoyable.
We can be found all over the social media space and at multiversityproject.co.
If you like this content, give us a like, comment, follow, share, or support us on Patreon.
Catch you on the flip side.